If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, guys. Welcome back to another live stream. Hope you're all doing well. And happy Friday to you. Got some interesting moves to discuss. Things really went crazy for the dollar here recently. Interestingly, gold is holding up okay despite that. Oil is down 3% here this morning. Actually came back to almost back to the highs here in terms of a closing price, or I guess the open price of this past Sunday's giant open here. Absolutely crazy move here recently. Take a look at Bitcoin actually holding up well today. I was looking around at different things with relative strength. Bitcoin showing some resilience here recently. If we take a look at yields this morning, yields continued to be strong. This is, of course, also contributing to that dollar strength, which is just unbelievable right now. Dollar index just ripping through the highs, back towards the top end of this range. And you know, we have been on the streams, on the videos, talking about dollar strength based on both technicals and fundamentals. From a technical perspective, this bottom end of the range held beautifully. The buyers stepped back in. We made, from a longer term perspective, a multi, kind of part bottom here to this overall move in the dollar. The question is there way more upside to go in the dollar? That is actually a very valid one, because I know that obviously this looks like a big move for the dollar index here, 4-hour chart, daily chart, etc. But if you're talking about where dollar can go, if this conflict remains prolonged, if inflation stays sticky, understand that the dollar could very easily make this kind of move again. There's nothing, sometimes we get caught in this recency bias or looking backwards on a chart and trying to determine whether or not that is, the new normal. But understand, dollar index during times of uncertainty, times of geopolitical conflict, times of global inflation, the dollar is kind of king. Go back and look at 2022 and 2023, and the dollar was a monster, right? The dollar was just perpetually strong as the Fed continued to hike interest rates. Meanwhile, the softness in oil prices over the last few years has generally been helpful to the global inflation story, which we've talked about a lot on the channel. And suddenly you have what is an absolute blowout in oil prices. Like, this is, let's put it very simply, this is a blowout in oil prices. We have not seen this kind of sharp rise in oil prices in a very long time. Now, from a nominal perspective, oil is trading at the highest level that it has been since 2022 when Russia invaded Ukraine. But at the same time, what is arguably just as painful is the rapid rate at which this oil price did rise. I was listening to something that said this was a 2 times more. Actually, I want to make sure I say this right because I heard it in passing. I was listening to a podcast. When COVID shut down, and I'm not going to try and give you numbers because I can't remember them. When we had the shutdown from COVID, supply lines were a disaster, right? In terms of barrels of oil being able to get, pushed out into the global marketplace. Well, the reason I'm bringing that up is because that was a big shocker and very scary to the markets at that time. Well, in terms of the global supply shock here, I was listening to people who are much more knowledgeable on the subject of crude oil than I am, saying that it was roughly 2x more painful in terms of the supply disruption with the Strait of Hormuz situation than COVID. And I thought about it. I was like, okay, well, that actually makes a lot of sense. When you think that a massive amount of global oil in especially places like Southeast Asia, China, Japan, India, Pakistan, these places import a ton of oil directly from that Strait of Hormuz area. And so you have this situation in which oil supply is under threat. And when you're talking about oil, you have supply and you have demand, okay? Demand comes from people demanding oil, people building data centers and shipping stuff, and the economies of the world are moving and shaking. When you have high demand for oil, it's generally about the economy, the global economy. High demand usually coincides with a strong economy. But arguably worse, actually definitely worse, is when you have supply issues. Because when supply issues come in, like in COVID, like in right now, that doesn't mean that it's way more painful because supply cannot be fixed by central bank tools. Now, when you have a demand problem, when oil demand is really low, and it's because the economies of the world are in pain, Western central bank traditional logic is you lower borrowing rates, you inject money into the system, you get the economy rolling again, and that demand should come back. But what do central banks do if the demand side is fine, but the supply side, if supply drops dramatically, like it is right now? What do central banks do in response? Well, Trump yesterday, he sent out a message saying that he thinks Jerome Powell should be cutting interest rates to help with this circumstance. However, there's some nuance there. I don't think the right move for the Fed is to cut rates just because you have an oil shock, because the Fed, that would be, in my opinion, the wrong thing to do. That would be an inappropriate action to take, because the Fed has no idea what the war is going to look like in a week from now. Are things going to clear up more in 2 weeks, or are they going to get worse in 2 weeks? The Fed doesn't know that. And so if the Fed doesn't, they can't operate on complete unknowns. So they have to just wait, right? A preemptive rate cut could be a mistake, as it has been done in the past and been an inflationary mistake. Okay. So it's tricky. Hey, thank you so much for the $4.99. Appreciate that. What's your opinion on dollar Swiss today? Yeah, let's take a look at it. So I'll just start by taking a look at the dollar. So I am bullish on the dollar. From a US dollar perspective, we'll pull this up. The main catalyst for, hey, what we're talking about right now is right in line with this. Interest rates staying steady. That is the bull case for the dollar. That is the situation that I think we are dealing with. That is why the markets are not liking this, because we were promised rate cuts. That's what the market was operating off of. The stock market is what I'm referring to. And now those rate cuts are looking like they're increasingly getting dashed apart. The longer this conflict goes on, the longer we see inflation on the rise. Take a look at this. Inflation bias, according to EdgeFinder, is very bullish for the dollar right now. Why? PPI, which we get new data for that next week, came in higher than expected. Let's go through our inflation readings together. 2.9% producer price index. Remember, Fed's target is 2%. We are at 3% PCE. By the way, we get new data in 4 minutes for PCE. So we'll see if that helps us out or hurts us further. And meanwhile, CPI came in this week in line with expectations. Okay, so we have PCE numbers this morning. They could be, they're going to be important to this market because it is, again, in that inflation category. So we know that more inflation is unfortunately coming our way. I dare you go take a look at the gas pump right now. It looks a little different than it did 3 weeks ago, right? I've been keeping you guys updated on this. $3.55. That is what gas price is near me. Now, I know Europeans just scoffed at me and said, "You silly American, that's nothing." Chris explained to me that my ignorance on this subject is that places like Europe, they have much higher gas prices. Now, this is per gallon, so the rest of the world, you guys should just use what we use here in the US. We are not coming to your system, so that's that. Totally kidding. But yeah, so in the US, it's like $3.55 per gallon. You can convert that to your lesser than system if you'd like. Totally kidding, my European friends. Put down your weapons. But yeah, it's expensive compared to where it was, and that is going to be an impact on global markets. The dollar index is at 100. That's pricing in inflation ain't going nowhere. Spoken like a typical American. Salute. Yes, sir. It's almost 4 times that in Italy. Oh my gosh. That's crazy. Yeah. Everybody give me your dollar per gallon cost of fuel. I'm just curious. Sheath your swords, gentlemen. That's funny. Just kidding, guys. Relax. Yeah, so we'll see. But anyways, the inflation reading this morning should be pretty interesting. If I go FX Street, I'm going to pull up the, why am I using FX Street? Here's a little pro tip that I've picked up on over the years. Forex Factory doesn't do PCE in a year-over-year format, which is what I like to look at for it. So if I go to my economic calendar, I've just pulled up another alternative site, FX Street, that has an economic calendar that will update here. So we've got this number coming out here in just a second. Let me see what we've got. We've got 30 seconds. I'm just going to switch over here. 8 euros. Dang. $3.60 in New York. Okay, that's not much worse than Atlanta. $2.83 here in UAE. Well, you guys are sitting on it. 10 seconds to go here. We'll see what the PCE number brings in. What am I looking at? I'm looking at PCE, personal consumption and expenditure, core matters. Let's see. It's coming in now. By the way, unemployment rate in the our Canadian neighbors here, 6.7%, came in higher than expected. Bad jobs report for Canada, guys. Just looking off that. Oof. Minus 84K for Canada. You guys good up there? Look at this. That's got to be moving. Well, I guess dollar's also moving right now. Yeah, dollar CAD's moving higher. CAD, yen, just off the bat. Yeah, moving lower a little bit. Okay, so in terms of movement, let's see if we got any. Yeah, stock markets are higher here a little bit. That's telling me you had a decent inflation read, at least in the eyes of the market here. Yeah, PCE, core PCE came in line with expectations at 3.1%. Personal consumption and expenditure came in at 2.8 versus 2.9 expected. So this is a better than expected print for inflation. 2.8% reading compared to 2.9% expected. That's going to probably soften up the dollar here a little bit. At the same time, for stock markets, we can see stocks are in the green today after yesterday's pretty big flush. At the same time, we have gold slightly positive, silver, oil still down 2.6. Dow Jones, I'm still short the Dow. I did trail my stop loss though. And if this thing rips today, I'm going to just take a profit on that. I put it just above this level of resistance here on the 4-hour and 1-hour chart. If that breaks, I take profits. If we break the low side, if we keep going lower, I'll be looking for another opportunity to trail stops. Will the DXY and JPY EdgeFinder scores have their score history backdated from before they were added? Unfortunately, no, they will not, Reese. So we record, the way our score records is it snapshots what the EdgeFinder was saying at the end of each day. So it can't, unfortunately, it can't backdate since before we were tracking those score points. So unfortunately not. Pound dollar. Yeah, so I covered my short. I am all out. Let me brag on myself here for a second. You guys know I was short the pound dollar. We took profits all out of pound dollar. Of course, it's continued a little bit lower here this morning, but hey, I'll take a profit and move on. This one absolutely rocked and rolled to the downside. Pound dollar was just clean. Every once in a while, you get one of these trades where it's like, no stress, no problems, just straight to target. And that was nice. So pound dollar was a really nice short. Am I still bearish on the pound dollar? Yes. However, I've been playing this pound dollar. Like, here's EdgeFinder's readings over time. You can see we have stayed bearish on this one for the last 1 month, really. And so we look at this, great run on GU. Yeah, it was amazing. Like, I wish I would be capping here for real if I tried to say all my trades were that clean. They definitely are not. But this one just, I mean, we smacked that right back down. As soon as it came into our zone, boom, short setup, EdgeFinder confirmation, stops above, and we just waterfalled right back lower. Very nice move. I am still bearish, and nicely, you can see it's actually the worst performer against the US. I think GDP numbers came in worse than expected for the UK. And so we can see the comparison notes, right? We see comparisons between the US and the British pound being very weak. So yes, I am still bearish on the pound, but now just going to reset and see if I can play it again. We're bringing Chris Pulver into the conversation, see what he has to say. Hey, Chris, how's it going, man?
Happy Friday. What's up?
Happy Friday. Hey, I was just bragging on my dollar bullish stuff we've been talking about.
I see that.
Basking in the sunlight. Actually, it's kind of cold where I am right now. What's the temperature like where you're at, Chris?
Actually, it's been pretty nice. It was like mid 60s
Oh,
yesterday.
nice.
We're heading to San Luis Obispo today for a little
Oh,
beach getaway and maybe sneak out and play some golf this weekend.
okay.
I
Follow-up
know.
question.
Yes.
What are gas prices like where you are?
They're higher.
Okay.
It was 269 last week, and now they're 350, 349, 350
Okay,
in the
yeah, I
last
was at
week. So big jump.
355 on the way in here today.
Yeah. So big jump. I'm sure
Yeah,
everyone's
it
experiencing
is.
that around the country, maybe the world, but
Yeah, no, I was just asking I was asking my European friends in the chat to graciously convert their
we don't do it right. They convert to
right. I
gallons versus
said
the
let's start
globe of
using the
liters.
correct metrics instead of the metric system. We'll put it in gallons, and
Oh my
everybody agreed
gosh.
with me. They said,
Yeah.
"Yeah, you're right."
Of course.
Um,
Yeah. And the many languages that we speak here in the US.
Right, that's right. English and English. That's it. Chris, inflation numbers came in a little bit better than expected here this morning, but so here's my hesitation with celebrating that too much is it's kind of old data, right? Like we're looking at stuff where volatility in oil was low before. I mean, not low, but it was much lower. Here's February movement in oil, and then boom, you start looking at the current move in March, which it was not reflected in today's. So for new macro people, the inflation report that we just got, that PCE number, it looks at March. It does not look at the right side of my cursor here. I'm sorry, it looks at February, not March, right? So
Right.
in April, we will report on what happened in March. So everything in the inflation reports that has come out, you kind of have to take with a slight grain of salt, given what has gone on with the Strait of Hormuz stuff. Chris, what are you doing with this market? Are you feeling more bearish, more bullish? Are you feeling selling premium? Or what are your thoughts?
Probably selling premium. Honestly, I feel like I've sold a decent amount of premium. I think I'm just going to sit tight for a little bit. I've got some reduction in my kind of portfolio allocation where it's still long gold, sitting in more cash and unallocated cash, or at least pulling in like the 1 to 3 month treasury mix, but reducing stock mix down to like only 25-30% equities versus 100% of like a 60% pie allocation. So long story short is that's a little cautious to look forward and think like, oh, that's trimming the stock exposure. Now, to be fair, it's like this could also be just to avoid tail risk and volatility drag, which basically means if we have a pullback coming, it's just helping kind of avoid some of that. I think you and I probably see the same technical levels on pullbacks, which would be, let me go back to the S&P here. If we have a pullback, 6,500, 6,150, maybe. But it's like, how have we gotten here so far? Not quick. Every low has been bought. I mean, even this week, it's like we just have a massive indecision candle. We're still in March. I'm just like looking ahead to April. What are we going to see in April outside of higher inflation? That's like the one thing I would think. I'd be shocked to see lower inflation print when we come into April CPI and PPI. So even PC was low today, which was surprising considering PPI was way higher.
Yeah. And Chris, I look at this situation, I'm like, I think that if you pull up the S&P 500, you look at a monthly chart, I still am just in the camp of thinking we have had, like, let's just face the reality of we've had a really good run in the stock market.
For sure.
And now we have kind of the perfect storm setting up. And so again, we have seen before the perfect storm show up and then roll away. So I'm not saying it's impossible that things could, clear out and things could be much better in 2 weeks' time. But I think the risk reward with stocks still not cheap, right? They're still expensive up here. And you have this mounting situation. Chris, here is a question for you. I've seen sentiment all over the place around this conflict. I'm not going to ask you to predict how long it will take place, but do you think that the market is more thinking it's going to be a quick resolve and that oil prices are just spiking short term? Or do you think that do you think the market is properly accounting for what could be a longer conflict? Do you think, what's the over under kind of thought on this situation? Do you think people are underestimating how damaging and how prolonged it could be? Or do you think people are overstating? Do you think there's actually a buy the dip opportunity?
Buy the dip on oil or buy the dip on the markets?
Let's say markets.
Markets. Oh, dude. Let me start with oil, because I think that's probably the biggest shock that we've seen to the markets. I'm surprised the markets have taken it this well, honestly.
Same.
So the fact that oil is up to $94 a barrel, if we creep up over 100, I think we're gonna have to talk about like this new Trump put. Maybe it's actually gonna be a Trump covered call. It's like we don't want to see oil prices up above $100 without having some serious talk or try to jawbone it back down.
Sure.
So I think maybe $100 is maybe the new line in the sand. It's like we don't want to see it going above 100. If it does, doing everything, like, just don't be surprised to see the media outlets picking up some things are looking better. The war is almost done. We're getting out of Iran. Blah blah blah. And then see what the stock market does. I think that is going to be a thorn in the market side if we see $100+ a barrel and the stock market still doesn't really budge, hasn't really gone down. I think it can roll over a lot faster. I mean, we're still in until we get through April, I think we're in this like weakness window. I mean, usually the pre-market push or the pre-summer push is usually like May to June. And so like this weakness window is like February, March, April to then get that pre-summer push into May that lasts until like August, September. It's kind of that season where we could still be in that weakness zone. Today is a totally separate day. The market might like it. Futures is, up 0.4%. So the market might hang on to a gain for the day. We still have a decent gap fill on SPX back to around 67.60 or so. If that's where the market's going to go after, but it's stuck between a couple of interesting spots. I mean, there's a gap fill right here. There's the low of the week from Monday. Let me see what was the high from last week, Friday. Let me go to, because if we at least poked the high from last week, it might have a chance to. Nope, it didn't. So we haven't taken out. I mean, we poked the low on Monday. Should mean it finishes slightly lower, or at least not take out the high. But anyway, I guess for today, I'm looking at like if I can sell premium around like the 68.50 zone, I think that's pretty safe. Here's what I'm looking at intraday. All of my short-term gamma lines up. We're gonna have a gap higher, but we're in negative gamma here, Nick. Which means that just the market flows, order flows should be buying puts and selling calls. I think a pretty easy trade for today is, stay out of the way, look for like a 20 delta, 15 delta, sell some calls, rack in some premium for the day, and not really call the downside because the VIX still is elevated.
Yeah.
I mean, we're at 25.7. This week, markets have really gone nowhere, but this week we really have had just this crazy sticky, like 25, 26 VIX. Which is great for premium selling, but it wasn't that long ago, i.e. Monday, where it was at 35. And now I'm telling myself, if I'm going to sell some more premium, I can't believe I'm being a stickler for this. I'm going to sell premium. The VIX is at 30 versus 25 because I have racked up about $400,000 worth of premium. In the last couple months.
I think that's a very reasonable way of looking at it. If you've got your first, kind of tranche of premium sold, wait patiently for that second. Two things really quick. I just want to answer this question. Nick, in a stagflation environment, will the EdgeFinder algorithm show gold as bullish or bearish? So it will show bullish because EdgeFinder is programmed to look at inflation data. If it is, if inflation is sticky or high, that is going to be more bearish for gold. But if you have truly a stagflation environment, you're going to have sticky inflation, but also at the same time, growth and jobs that are both hurting, right? So that will outweigh it and still lean slightly more bullish on that. Anyways, here I also wanted to show just a chart here to go with our discussion about the whole conflict in the Middle East. Of course, no one knows, and we are not experts on what is happening in the Middle East. I want to get that out of the way first, but I just wanted to show where the market is positioned visually with the help of Polymarket's tool here for their betting markets here. But check this out. So if we look at Iran, Israel, U.S. conflict ending by, what we can see here is that the market, at least on Polymarket's odds here, is kind of suggesting that you are most likely, the consensus is that you're going to have the conflict end somewhere between April and May. That's kind of where we are priced at, a 50-50 shot of the war being over. Now, nobody knows, so this could be completely off or it could be very close. So I wanted to ask the audience, what do you guys think? Would you take the 1 or the 2 option? Now, let me explain. The 1 would be you think the war is going to end before April 30th. Like you think it is going to at or by April 30th. You think the conflict will be over between Iran, Israel, US conflict. The 2 would be you think it is going to still have some semblance of ongoing conflict past April 30th.
What's the fine print there? Like what has to be, what's technically over? Because if we have troops there, presence there,
Good question.
Like what technically is the fine
This
print
market
for?
will resolve to yes if there is a continuous 14-day period without any qualifying military action between Iran and Israel. So no military action. That
Does the ceasefire qualify? If you have like a 30-day ceasefire or something like that, will that qualify?
Cyber attacks, sanctions, and diplomatic actions do not count. This includes, but not as limited to, airstrikes, naval attacks, and ground incursions. So it's pretty much just military actions, binary yes or no. And they have to be pretty binary with these things because they get sued like almost all the time because people will be like, hey, you said this. And gosh, that sounds like a messy business.
I'd hate to lose out on the fine print technicality of I thought I had this, nailed dead to rights, and they're like, nope, this little thing, this little nuance of the bet that you are not going to get paid out.
Yeah. Well, and Chris, I'm just going to go back to my logic here. Personally, I think I would take the 2.
Agree.
I think that Trump, when he is talking about it, wants it to be over very quickly. But I think that the Iranians do not want it to be over quickly. They want it to.
Nobody has won in the Middle East, dude, ever.
Yeah.
Ever.
And again,
it's like, what are we doing?
Study history, the British, the Russians, the previous time the U.S. was there. It's a difficult place to tame, it seems like. And we also have an example, Ukraine and Russia. We thought that was going to end a while ago. Trump also thought he was going to be able to end it quickly. We have seen these conflicts are pre-planned for quite a long time. There's objectives on both sides that are staunchly, opposed. And so nobody knows. I'm not an expert. I'm not, claiming I know what's going to happen. But my opinion is that I lean more in thinking that this thing could be stickier than what we're thinking. And that is why, Chris, when we talked about it, I said this the other day, and I'll keep saying it. I've kind of been leaning towards, I think a 10% correction on the Dow or the S&P 500 is reasonable.
Yep.
And so, I'm still positioned for that. I am short the Dow. I do have a stop trailed on this one. So if we pop today, I'm just going to take profits and reset. But I'm not opposed to potentially looking for another short setup. Dow Jones trade has been going pretty well. But I am looking for, if we can roll over today, if we take a move through those lows, I'll look to trail my stop further. And if we pop today, if we keep moving higher, I'm out of there. I'm just going to call it good.
Sure. I think I'm going to set up a couple of trades where for the next maybe 1 or 2 weeks, I continue to look to kind of fade this market. I mean, we are making lower highs, lower lows. We could have a, 1 or 2 day pop, but structure wise right now, we are noticing lower highs, lower highs, lower highs, lower highs, lower highs. Now, until the structure changes, I think this might be a pushback up to like maybe 68 and then it gets faded back down. Trade that I'd actually be taking. It's an interesting setup. It's called a call condor, and that gives me a profit trap. So what I might do is, let's say this is the structure. I put something up here that maybe lets me capture a profit trap up here, and then my risk is defined, quite a bit higher than the structure. So basically, I can pull some premium in. Let's say I can pull in maybe $2 a premium. I give myself up to like $1,000 profit trap. And my risk might be, I don't know, maybe $400 to $500 or something like that. But probability profit's probably in the 85 to 90%. If we continue to make lower highs and lower lows, that should do pretty well. That stays out of the way. Just because I think if we get that pullback you're talking about, what we haven't really seen outside of like the single day sell-offs is we haven't seen like the single day sell-off that is followed through by another day, right? Like that's where people are probably going to start losing their confidence in a bull market is 1 day sell off of maybe 2+%, and then another day sell off of 2+%. Even though it's still contained, it's not like we had a 10% correction, but the market dropping like multiple, like 1.5 to 2% swings to the downside.
Well,
I think that's going to rattle the bulls a little bit.
If you get that, Chris, that we lose the 200-day moving average right there. I mean, we are right kind of just shy of the 200-day on the S&P 500 simple moving average. So you get a couple days like that, and you have lost that kind of wave of confidence that did come in at the 200-day moving average. We're right back down to that area. So you start losing that, and there could be a flush like you're talking about.
Yep. I mean, we are really close to it. And again, at this point, it's like, I think we should hit it. The CFD tapped the 200-day, but the SPX from opening bell, closing bell. I mean, yesterday's candle does not look encouraging because we had such a strong gap to the downside. But yeah, it's right there around 65.90. I don't know. Part of me just wishes we get there because I've got a big fat profit trap waiting for it. But my timing is today and not next week. I think by next week we'll probably end up hitting like 65.50, which means that I mistimed my butterfly spread by a week. But oh well.
Yeah. Well, and we'll see how it all plays out. I mean, somebody asked a good question in the chat. They said, Nick, if we go through day 30 and no ships have moved, will we have a global recession? It's tricky to say because going into this, the economy was in a decently okay spot. We had cool inflation, economic metrics that were decently healthy. I wouldn't say it's like, oh, we're in a global recession now, because we've seen it's kind of like the COVID setup where we did have supply chain disruptions, but we were able to kind of see the Fed start going crazy on the money printing and save the day. Will we see something similar like that? I don't know. I think what would be more concerning is if we got to day 30 and there's no signs that we are even getting close to, like, if things are getting worse in the Middle East, then yes. Right. I mean, then you have the concern of that could completely see an inflation spike that could be really painful and send us back into a conversation about the Fed having to hold interest rates for the foreseeable future and even hike interest rates if necessary at some point.
Dude, if we cut interest rates in this environment, I'm like flabbergasted. I'm saying if, like, it's not scheduled to, but I'm like, if Warsh comes in and is kind of strong arm into like, we've got to cut, another 100 basis points. Again, it's going to cut on the short end of the curve, not the long end of the curve. But I'm like, what are we doing? What do we do? I mean, again, like a lot of the stuff, I have to ask why. And I know that I don't know the answers, and I know that I'm not going to get the answers, but it's like, I just wonder, like, what is the motive behind everything that's going on right now outside of either misdirection or there's some big plot and big, power play that I don't really see yet. Anyway, I mean, I'm just a freaking trader, but it's still just like baffling. It's like, what are we doing? What are we doing with the world? Like, this is another, it just feels like another like self-induced pain in the butt where it's like, why is now the time to throw crap at the Middle East? I don't get it, dude.
Yeah, we were talking about that yesterday. It is a strange, inflation was almost kind of getting back on track. And, now we've got this new debacle that could be, again, look, when we look at oil prices, Ukraine and Russian situation, we didn't even see in that situation. We didn't see oil move as quickly as it is doing now. Of course, it did ultimately go to $125 a barrel. It was a crazy, and that was very problematic. I mean, we saw central banks kind of have to go on a hiking cycle. Now, it wasn't just because of the geopolitical conflict, so I have to also throw that in there. But it certainly didn't help to have oil supply issues. And so now we have potentially another one, and it really comes down to duration. And I think that the answer is nobody truly knows. Nobody here knows for sure how long this conflict is going to go. We might have educated guesses. Some of us might think, oh, it's gonna last longer. Other people might think it's gonna last shorter. But at the end of the day, that uncertainty, that unknown, until you resolve those things, I still kind of lean into thinking that this is sort of a seller's market. The longer that just kind of remains a question, I remain cautious, dollar bullish, thinking the VIX could remain elevated. Gold, I'm kind of neutral because the strong dollar makes it a little less attractive. I just think there's other plays out there. So certainly tricky. I mean, I think that I'm just following the trend here, right? I think the trend here, you pointed it out, lower highs, lower lows. Mm-hmm. Look, the trend recently has shifted. We went from a very clear uptrend to a choppy trend,
right,
to losing some of the key structure points. And now that 200-day moving average, you start losing that. I think you are in a downtrend.
Yeah. It's a line of defense, right? If the 200-day moving average is hit and it bounces, there's buyers like stepping at that level. But if we give it up, and I'm just looking at the structure on that S&P, if we give up that 200-day, this is the daily. It's like this does not look good below the 200-day because you've got two key spots. You have the 200-day moving average. Actually, I'll go SPX, not CFD. So here, if you give up the 200-day, the only level left would be, okay, we're at the major lows that we saw, those single-day sell-offs last year, October 10th, November 20th. We take out the 200-day. If we poke and close back above, that's going to offer maybe a short-term buying signal. Depends if there's follow-through. But the scary part, Nick, is below that 200-day, it's very, it's a soft underbelly on the S&P below that 200-day moving average. We have, really nothing until 6150. So that's where things could get ugly very quickly. I mentioned this yesterday. This is kind of big picture stuff, but I'm like, I mean, long term, I'm always a bull because that's what the market has done.
Of course.
But I do think that if you look at April 2025 lows to this previous high, I mean, let's say that the market, here's where it's going to be the most confusing for traders. We take out and I know my charts are really messy. Just bear with me. Let's say we take out the 65.50 lows and the market goes, okay, a little top there. We take out the lows. This is the most, I think we talked about this yesterday. This is the most confusing chart for traders because it's going to look like a clear topping pattern, a clear head and shoulders, and there's going to be some loaded bears, right? But I think that setup is going to be either creeping back to highs again, possibly taking the highs out for a broadening pattern, and then that sets us up for like the bigger correction later. I just think that this year, I have no idea. Like timing wise, it's like I think the market in the U.S. remains somewhat determined to not fall dramatically until after midterms into 2027. I think we kick the can down the road. We try to throw everything we can at it to reassure the markets are fine, economy is booming, corporate profits are blah blah blah, money's still being spent, everything's great. And it just feels like, okay, I mean, maybe on paper it sounds better than what it's showing us on the charts. But what's crazy is looking at the valuations. I think I posted this in my thread yesterday for Discord. We now have like the consumer staple side at like 40 times earnings, 50 times earnings, like Walmart and Costco. And you actually have tech that's been talked about as like the bubble. Tech is actually undervalued in relative terms. But like everything else now is more expensive. So the 490 all of a sudden in a way got expensive compared to the top 10 stocks. So I think that you have to have a bid in the top 10 to drive things back up because it's such large market cap. But you have this flow into the 490, which is great. But now those stocks are getting expensive as well by historical means, and they don't have the growth. Like Walmart is not going to grow at 10 times sales. Walmart's going to just be overpriced, and it's going to offer like next to no dividend. I mean, they're trying to say like, oh, it's an AI company now. It's like, it's not. It's still a grocery store. It's still a consumer staples store that pays their employees crap, and their CEO makes like 6,000 times more than the average employee. Anyway, a little plug for Walmart. But it's been a good stock. It's just, I think that now it's overvalued. If you look at I think I posted it here. Let me find it from Discord yesterday. Let's go to the journal. So this is the heat map. Oh, I didn't post the other one. Sorry. I meant to post both. It's right here. Didn't post. Never mind. Fudge it. Let's go to FinViz. Sorry, dude.
All good.
FinViz. If you look at it from heat map and then go into your price to earnings, this is what's showing like, oh my gosh, everything is expensive. You look at from price to growth, PEG ratio. This is the crazy part that I meant to post this yesterday in addition to the heat map. Walmart is now considered overpriced, where it's like it can't really grow into this PEG ratio. Nvidia, Broadcom, looking better. Micron, I mean, 0.1 on Micron. The stock's been ripping 300%. Tesla quite high, but I just think when you see green in the heat map, and yet these are now showing expensive, I just wonder how much money is going to pump into these stocks. Like you're now paying a premium for value,
Sure.
which is rarely the case. Usually people pump into value get their money out of it, and then they either exit or get out waiting for something else. So I think we just have another rotation coming. Like, we rotated hard out of top 10. Maybe if we want to see all-time highs again, we have to rotate hard back to all-time or back to the top 10. And that's like head spinning rotation, because money's not necessarily leaving the system. It's just trying to find ways to be treated better. And I don't know, it could be just like rotation this year. And that's what keeps the market resilient, but not necessarily like pumping into new all-time highs.
Sure. Chris, I've got this overall kind of captures my bias right now. I'm looking at the top setups page, which of course just looks at technicals, sentiment, economic and consumer strength, inflation metrics, and jobs market data, sort of a macro heat map. And what we can see here, this pretty much settles where I'm at. Bonds bearish, like thinking the yields could continue moving higher. I'm still in that camp. The Russell, Dow Jones getting bearish readings, Chinese stocks getting bearish readings, dollar getting a bullish rating, Aussie dollar getting a bullish rating, platinum, silver, Kiwi dollar getting bearish. And I think, like, if we just sort of acknowledge that, okay, no one knows exactly how the next headline is going to hit, what's going to happen geopolitically, what's going to happen with Trump. We don't know that. If I just scrap all that and leave that to the side and just say, what am I left with in terms of the economic data? We have relatively sticky inflation, a rising 2-year yield, jobs data that doesn't look too hot. That leaves me in the camp of thinking, all right, the neutral or the path of least resistance for me is to think risk off. Like, we could continue to kind of just reset a little bit on this market. And I think we just kind of take it one day at a time. Again, if you get some headline that breaks that theory and, oh, it's all coming to an end and the war is over, then hey, I'll reset and I'll acknowledge that, because at the same time, yields will probably start to reflect that, which is a direct input to, EdgeFinder in my system. So I think that's where I'm at. I think I'm just going to stay cautious, thinking yields and dollar could move higher. Meanwhile, take small stabs at the short side of the indices where I can see those setups, and I'm just trailing stops real tight on those that I do short.
I think the yields too. We haven't really talked about it too much, but yields are not going down. 10-year yield. I mean, it's up. I mean, we had a sub 4. It's up 30 basis points right now. That's 10-year. 2-year is up 35 basis points. I'd mentioned to you on Discord the 10 and the 2. I know that we haven't talked about the disinverted yield curve for months because it hasn't really mattered, but it will matter. And this is one thing. I mean, a couple things as far as like big recessionary indicators. If you have residential construction jobs going in a downtrend, which I think right now that's not going to happen because the supply side is so active right now. But the 10 and the 2, if they get to like 150 to 200 plus basis points separated, then you start to work into that like disinverted recessionary trigger. I mean, we're only, we're 50 basis points. We're like 50 to 55 basis points different between the 10 and the 2. If that explodes to like triple digits, if we're 150 to 200 basis points or more, I'd be very concerned that, and again, the stock market already might reflect this, but that's just another kind of recessionary type indicator. So I think right now, Nick, a lot of people are asking us, is this a recession that's coming, or is this a, depression? And I heard Tom Sosnoff talk about this on his new, his new show, like One Lucky Dog. He just said that there's probably no such thing as a depression in the U.S. ever again, just from the lessons we've taken away from 2008, 2009. There's a lot of levers to pull. There's a lot of programs to run. There's a lot of things that the markets can do now to kind of absolve or take on like the a recession is one thing, but how quickly can we get over it? But I also look at sentiment. We've got 46% bears this week in AAII. I still think you're right back to the same thing as like, this might be the slow grind to the downside, rattle off all the frothiness. The market still has a pump left into it. That pump might get us back to 7,000. That pump might get us through 7,000. I would just be, again, the hard part is it's exhausting to literally trade day by day, but that is probably my favorite thing right now. Is just selling premium when VIX is high, trading day by day to make some income, and
like
have
zero
cash
DTEs,
ready.
Chris?
What's that?
You're saying like zero DTEs, like trade?
Zero,
okay, gotcha.
Zero DTEs. I trade zero DTEs every single day, and I generally do pretty well. I've got over like 530 trades that I've won 89+% of them. It's a lot of prep in the morning, but it does It does the job. It's basically trading like a market maker and selling premium and having good ways to do it, finding the high probability of profits. And I mean, intraday, the market moves way less intraday than it does overnight. So
That makes sense.
long story short is like when you have implied volatility is very, very high like it is right now, the implied is typically much greater than the realized.
Yes.
And the simple way to say that is like your expected move is way higher than your actual move. And that allows market makers to keep a very stable market and make money on both sides of the trade.
That's the edge, right?
Exactly.
Love it. Chris, we're out of time. Got to throw it over to our next show host, but thanks for all the great sessions here this week, and have a good weekend, man.
Okay, man. You too.
See ya.
See ya.
Guys, we've got up next, Tiger Barry taking over the stream, talking about trading setups that he's watching in this market. Hey, real quick, I just want to make sure I leave you guys with something to take with you. Make sure to join our Telegram channel. And the reason I say this is because if you're somebody who enjoys learning about macro, you're interested in how does oil impact inflation, inflation impact the dollar index, and how can I use that information to find more powerful trading setups. One of the quickest ways to learn, because I get this question all the time, how can I start learning that stuff? I understand that stuff's powerful, but how do I start learning? The answer is there's no substitute for just getting into the thick of it. But one of the best ways to get into the thick of it is to read the daily posts that are coming out in our Telegram channel. Alan from our team does a wonderful job breaking down the economic data and how it is impacting the charts today. If that would be useful to you, make sure to join our Telegram channel. The link is in the live stream chat. The QR code is also below my camera. Up next, we have another session starting with Tiger Barry taking the lead here and talking about some trading setups. With that said, up next, Tiger Barry. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, good morning, everybody. Happy Friday. Great day by default, as always. Hope you're all doing well out there. Currently out of my trade. I did finish out my pound dollar. It did hit my take profit while I was asleep, drooling on my pillow last night. Got up a little late today, guys. I tell you what, if I have one thing I'm bad about, it's getting to bed at a decent time. So I'm struggle busting this morning. Got a headache, but I'm going to try to give you guys some energy nevertheless. So as far as currencies go, I was just looking at the surprise index. We of note really this week, dollar, just taking a look over here at the economic calendar for the red folder events. I would say, sometimes I kind of look at the weekly results off of the economic calendar as its own mini EdgeFinder, just taking a look at it from a fundamental perspective and seeing how a currency did. Looking at the dollar, everything was pretty well neutral this week until we got to the GDP report, the preliminary report. So that did give us just a slight bearishness from a fundamental perspective. But obviously the dollar itself, if you encompass everything, is giving us a pretty decently strong signal from the EdgeFinder point of view over here. Just taking a look at The dollar over here still getting a nice +5 score overall. So yeah, just a little bit less of a score from the sentiment, but otherwise technicals, fundamentals, hey, still looking pretty good. So, this is why we look at the EdgeFinder overall instead of just the weekly results, right? Because we want to encompass everything. This is part of where I used to go wrong in my past life in trading, focusing too hard on what's in front of me today, seeing, oh, we had a negative GDP report. That means the dollar sucks, right? No, we got to look at everything as a whole, as an aggregate, as we say on the show all the time. So yeah, dollar overall still staying nice and strong. And that's part of what helped my pound dollar short. And not to mention, just going back over to the surprise index, having the pound still remain as the weakest currency fundamentally overall. So yeah, maybe look next week at trying to get right back into it. If I can get a little bit of a retracement upwards towards another supply zone, might take another stab at it short. So Canada, they had their numbers come out today. They had their pretty not so good, let's call it, employment numbers. They dramatically missed their employment change number, minus 83,000. And then their unemployment rate just keeps very slowly increasing. I've watched of late. I mean, now we're back up another 0.1% over to our friends north of the border here, 6.7%. So not the greatest. And yeah, by the time EdgeFinder kind of updates, then we'll start seeing the Canada percentage up here drop. Okay, it's going to start going down a little bit, because if we look at Canada's economic heat map overall, looking down here at the employment change, unemployment rate, employment change. Okay, the most recent report still giving us that bullish signal for the unemployment rate. So, and then a neutral for employment change. So we're gonna, as soon as this stuff updates, we'll start seeing a couple of red boxes. Canada, man, it's going to start getting closer. I don't think it's going to be there quite yet, but closer to the, hey, I want to sell the loonie section. Okay. So anyway, just taking a look at the pound dollar short. And guys, let me know if you have anything you'd like me to look at as well. Yeah, Goldrum. Yeah. If I can find another supply zone, I'll definitely short the pound dollar, but I don't want to do it today, at least from a 4-hour perspective. I don't like getting into the 4-hour zone trades on Fridays, because oftentimes there's just not enough time in the day, and depending on what the average true range says, the ADR of the asset, there's not a lot of time for price to go from the zone to, the potential take profit. So I don't want to be holding trades open over the weekend, at least not right now, not till they calm down some wars and stuff. So I'm not interested in it. What I will be interested in for the rest of today is starting to look at some smaller time frames, perhaps the 15 to 30 minute. Just something I can look at as more of an intraday trade. So a day trade, an actual real day trade, if you will, not so much a swing trade. So that's what I'm going to stick with today. Personally, that's just my risk tolerance. That's, again, that may not be for everybody, but I just try to avoid, like the plague, those Sunday gaps. Okay. Like we've had over the last couple weeks. Right, we've had a lot of gaps. So that right there is exactly why I try to get out of all of my trades. And then yesterday I mentioned Aussie dollar. I'm just looking at my notes over here. So yeah, I'll show you how that one actually worked out. I stayed out of that Aussie dollar because of the signal that I got. But let me take another quick look up here. Yeah, oil calming back down. Yep. Let's see, gold. So yeah, gold and oil, says the chat. Yeah, let's take a look at a couple of these things for you in just a second. I'm going to look at the pound dollar where I closed out the trade. I mean, it was $1,200 on one account, 450 on another, and then 472 on another. So again, guys, I don't tend to place big risks on my trades, but when you have 2 or 3 accounts, okay, in my case, 2 of them are challenge accounts, okay, and then one of them is an instant funded account. When you start stacking a few different, a few different accounts together, then it just makes it easier to not have to risk so dang much if you want to make some decent money at some point, right? So, and Nick did an awesome video, by the way, here, I think about a month ago or a month and a half ago. You guys might have to search for it in the archives, or maybe they could show the link. When it comes to challenge accounts, there's kind of a way to play these prop firms. Okay, you don't want to be coming to them with a $10,000 or a $30,000 profit withdrawal a lot of the times. I do think the gentleman he interviewed said something about he kind of averages like a $2,000 to $3,000 payout because guys, sometimes prop firms can be fishy when you come to them and saying, hey, I want to withdraw my $30,000, $40,000 profit. They like to look for things. So yeah, we'll have to find that video and put a link in the chat. But that was a really cool video. Kind of opened my eyes a little bit. In other words, just skim a little bit, stay under the radar. It was kind of the overall message of that show. So really eye-opening stuff. But anyway, yeah, having said that, let's go have a quick look at pound dollar. So yeah, just a quick recap, guys. I had this 1 hour supply here. I had this 4 hour supply here. It ended up catching the bounce off the 4 hour, and then we started rolling around. And this is one of those trades, guys, where you got to have patience. Okay, I got in this trade Tuesday morning, if I remember right. No, it was Monday. Never mind. It was Monday evening. So Monday evening, I got in this trade, and this is why I prefer getting into trades on Mondays, Tuesdays. Okay, get in the short there. It does give me a bounce. It ends up chewing through the rest of that supply. It takes the bounce from the 4 hour, 1 hour confluence up here. Remember, I got my white line denoting my 1 hour. And then from there, it just kind of dicks around sideways for a while, guys. Call it what it is. For about a day and a half before finally the risk offness in the market that we've had kind of finally catches the movement. Dollar strength, obviously, from the +5 we saw on the EdgeFinder for the US dollar, guys. The dollar individually isolated. Okay. And then we finally pushed down. Okay? It gets real sweaty up in this area, guys, at times. But for me, I trust my supply zones. I mean, they don't always work out. Nothing always works out in trading, but just sit on my hands and just ignore pound dollar basically for the rest of the day. So we did finally come down. You guys see my profit line there, and we're out. So yeah, there we go. I mean, that was my one big trade of the week, and makes for a good week. Trading isn't always fun. It isn't always glorious. Sometimes you just got to step away, and the last thing we want to do is be our own worst enemy and start trying to take small profits up here just to feel good about ourselves earlier in the week. Okay. This is something that took me a lot of patience. Because by the time I'd get a 1-to-1 in the past, I would start closing my trades out, and then this would happen where it just continues to dump and give me what should have been a much bigger profit. So good deal. I followed my rules. I'm happy with myself. But yeah, let's go have a look for you. You guys were asking about oil and a couple other things. But so yeah, like I say, I'm not in a trade right now. Just going to play around on some smaller time frames for the rest of the day. But as far as oil goes, let me get my multi-view up here for you. Daily on the right, as always. Taking a look at my 8 and 21 EMAs, making sure they're in line with the EdgeFinder. Now, obviously, oil is not on the EdgeFinder at all. Okay, so this is just purely a very volatile, speculative move at this point, with people running around with their hair on fire. But we did obviously get the nice boost yesterday. And as far as just looking at it from a technical setup, you're starting to come into a high on the curve demand zone. I probably would not be interested in that. Plus, it's kind of skinny. Okay, talking about this zone right here. A little bit on the skinny side. I do like how it broke structure. It didn't really close, though. So a couple of red flags. It didn't close immediately. And the leg out candle volume spread analysis size was puny. Okay, that was your average. Remember, anytime you see a green candle down here, that is average volume, average activity. Blue is under average, below average, right? So I want to start seeing yellow and red. We just didn't get that. We didn't get that over here. We did get some yellow candles, but it wasn't until this candle here, but that's after our leg out candle. Okay, so not interested at all. I know that the trading view indicator I do have, guys, I told you about the other day, the supply and demand zone indicator. Okay, it marks it up as a demand zone. But this is where it just takes screen time to figure out what works and what doesn't. Okay. Skinny, no volume. So I ignore it. And high on the curve, right? Remember, I want to go for those institutional type zones that are deeper into the curve. Okay. More of a discount. remember, the way we should buy and trade, or buy and sell anything in the markets is the same way you already buy or sell anything in your everyday life. But far too many people do quite the opposite. Again, we talked about the breakout trading, buying when it's more expensive, selling when it's down in a discount. It's the opposite. Okay? And that's your retail sentiment. Your retail sentiment report for you right there. When we see everybody's long on something, we might consider doing the opposite, if anything. So anyway, as far as oil goes, we're still a little choppy. I might have pointed out this kind of choppy zone down here yesterday, guys. It's just a little bit too sideways choppy, retail choppy. So for me, I wouldn't be interested in anything oil unless we came and started closing some gaps much further down. But by the time we get down here, okay, we're going to be in a downtrend. So that's the other thing. A lot of variables to weigh. So not really anything right here. I mean, if you wanted to be really aggressive, hyper aggressive, because we have had a pretty decent boost the last couple intraday sessions, then yeah, that demand zone might make some sense. But that would be one where I would be risking very little, just kind of tiptoe in. Okay, our pool is about to open up here in Lenexa, where I live. They're going to open our pool soon. That first entrance, I'm not going to be cannonballing. Going to be tiptoeing in, right? Got to get used to the water. So that's kind of the way it is with some of these zones that are high on the curve or low on the curve if we were looking at a short. So anyway, that's my thoughts on oil. As far as gold goes, yeah, we did have quite the drop yesterday, and now it's kind of bouncing around, going sideways. Same thing. Gold is not on the EdgeFinder, but silver, I do believe, is, right? I think I saw that. Silver. Or never mind, it's gold that's on this. Never mind, gold is the one on the list. So yeah, gold. Let's have a quick look at it. Yeah, see, it's just too sideways. Again, you guys see over here on the right on my daily chart, I've got my master pattern indicator on. Remember, we kind of talked about contraction, expansion, trend legs yesterday. Well, you guys see that orange box format. That just simply means we're in a big higher time frame contraction. So I need to personally wait until price leaves that zone on the higher time frame to drop down to the smaller time frame to see if we can get a retracement to a zone. So that's a no-go for me personally right now. Obviously, there are some demand zones a little deeper down, but we don't want to be buying. We want to be selling, if anything, because it's on the EdgeFinder to short. Okay. So, yeah, probably not anything for gold for me for the day. Silver-wise, yeah, same thing. We're starting to get that contraction box going. We had a demand zone back here in the past for a very short while, but what happened? Price bounced into it, and it's already left, right? Got the wick. So we left, we wicked in, and we just bounced, guys. So, yeah, I think there's a lot better assets personally to be trading, or at least for my trading style anyway. There's a lot better things to be trading than trying to trade something that's just kind of giving us some fair value at the moment. This is where buyers and sellers are agreeing, guys. That's why prices stay where they stay. There's not a strong enough conviction to push prices higher. There's not a strong enough conviction to push prices lower. We're just kind of hanging out in no man's land. So, yeah, I'm not interested in silver either. What else did we have? Aussie CAD, Zoltan is asking. Mike Pitt. Yeah, Aussie CAD. The Aussie pairs, guys, at just 30,000 foot view are still the strongest ones to look at. I mean, look, it's being, what did we say? 83.33% on the high economic report release. Okay. Exceeding expectations. Got about every Aussie pair up here on the bullish side. Aussie CAD, you're asked about, +6. So I do believe, didn't that get a little weaker? Didn't Aussie CAD, wasn't it a little higher yesterday? Let's go look at the history. Oh, it was 4. It was okay. So it was a 4 yesterday, but remember, just fairly recently, we +7, +8 for a couple days before dropping. Yeah, +4, but now we are at a +6. So, yeah, +6 is where it's at. Let's go have a look at it for you real quick. Aussie CAD. There we are, Aussie CAD. Yeah, so we did bounce. Oh, yeah. So remember, guys, we were talking yesterday about this demand zone hanging out at the 50% retracement of the swing low down here to the swing high. So right at 50%. So what have we got? Did we get any kind of good trigger candles? Let's have a look at a 1 hour time frame. Looky here. What did we get? Okay, remember, this is our demand. And then we had the 4 hour demand, which is the box. We had the 1 hour, 2 hour demand confluence, which is the white line. So what happened? What did we get? What was our trigger signal right here, guys? Bullish engulfing candle. See that green candle overlapping the last red candle down? Now that looks green, guys, but if I turn off my supply and demand zone tool, it's obviously red. Just whenever you, it just kind of colors it funny whenever you turn it on. But okay, we had our last down candle. Then our next up candle, bullish engulfing. So there's our trigger right there. What's our trigger? Breakout. Now, I just said earlier, buying breakouts is when you're buying expensive. So Tiger, you're contradicting yourself. What the hell are you talking about? Which one is it? Well, it's a breakout on the small time frame, but it's still within the zone. It makes sense. Buying an expensive breakout is, buying further up here after you get a higher time frame candle, but we're on a smaller time frame. So this is the difference, is the fact that I'm still within the confines of the zone itself to be buying the breakout here. Okay. So we would basically be buying at the top of the zone, right? On its way out. And there you go. I mean, look, we've already broken this structure of all these ugly wicks over here. So, that's it right there. I mean, that's where I'd be putting some money in. Now, the only potential red flag on this is the fact that we did break through the distal line of the demand zone. Okay. But this is where obviously our stop loss would come into play. I mean, if we were to have measured this out, I think if I remember right. Okay. So yeah, we're going to put our buy here since that's the breakout of the bullish engulfing candle. Okay. Go to the top. How many pips did we say that was yesterday? 140 pips. So what's 140 divided by 2? That's 70. See, this is your stop loss clear down here. Now, that's your 2 to 1. But I also said that I usually stay somewhere close to the 50 pips. So if you wanted to keep it a true 2 to 1, then it's 70 pip stop loss. If you wanted to improve it to a 2.5 to 1, getting closer to a 3 to 1, then you can actually bring your stop loss a little higher. But remember, this is where you don't want to choke it out. You want to give it some wiggle room. So perhaps 70 is a fine. If you're okay with just 2 to 1s, then you've got I think, high reward risk, high reward, low risk setup. So there you go. And then, there's obviously a couple supply zones to potentially worry about, but I don't think I would be, because when you had price leave this zone, like the indicators drawing up, it dropped, but just got lazy. It's not like it was a 3 candle drop, 4 candle drop. I mean, it was a 3 candle drop, but they were or 2 candles, I guess, but it was just very, very lazy, very slow, guys. So I don't know that I'd be worried about looking at the zone. In other words, the bottom of the zone for the take profit, because this zone's already been mitigated. So we're not worried about this one. So because I'm not worried about the zone as much, because we didn't have any strength coming out of that area, I'm just going straight to the top for this, which is the 140 pips and the 70 pip stop loss. Okay? But I wish that this wouldn't have hit until Monday. See, if this were Monday, I'd be getting in this trade, or I would have gotten in this trade, but not on a Friday, because like I said at the outset, I don't personally like to get into the 4-hour trades on a Friday. So let me look over here real quick. I think I did see if it starts becoming fun. It's starting to become too emotional, I feel. Yes, I see Keika. Yeah, one of my mentors told me long ago, he said, us as a group, he said, whether you win, like Nick K, he had his $90,000, $100,000 win recently. Whether you win a big amount like that, or whether you take a big L, a big $10, $20, $50,000 loss, it's easier said than done. But basically what he told us is your emotions should remain the same. The poker player emotion. If we're getting super excited and turning cartwheels on a win, that's not good, because what's going to happen when you lose? It's probably going to be amplified. And do we trade good under stress? Do we trade good when we're too excited? It's kind of like getting that liquid courage after a few beers or whiskeys. Okay. We start saying and doing things that we wouldn't do under normal circumstances. We don't want that in trading. We don't want the slot machine mentality. We really don't. Trading should be boring and it should be emotionless. Now, again, that's easier said than done. We're all human, but that's really the goal to strive towards. Basically what I got out of the mentor. If we have a big winner, great. If we have a big loser, great. Okay, let's just regroup and go on to the next one, because it's not about any one trade. Nick says it all the time. Okay, it's about the next 100 trades, 1,000 trades. So one trade in the grand scheme of what we do should matter. My winner doesn't matter in the grand scheme of my attempts to pass my challenge account, start making some money off of my funded account, right? That's just the reality. So got to look at it as a whole. And then, just to finish real quick for euro dollar, and then we'll get up out of here. I think James is coming on right after me. Yeah, nearly down. EdgeFinder, I do believe, was still giving us our down signal. Is that right? Or our short signal? I do believe. Yeah, -6. So it is a bearish score, but not as bearish as I personally like. You guys have probably heard me say, me personally, I just like to see 7s, 8s, 9s, not so much the 5s and the 6s. That's not a knock on EdgeFinder at all. That's just my risk tolerance. I just like the stronger scores. We are getting close to a demand zone, just to be careful about. That's this 4-hour zone from way back here. So I think we're at too cheap of a price to be trying to short this thing. We got to definitely find a rebound into a premium zone. There's a recent swing high, swing low. Okay, this top third would be the ideal high probability zone to be shorting in. We had a zone, but it's already been touched. So last resort is, let's go down to a 1 hour. And it looks like we might have a zone here to be keeping an eye on for next week. Okay, talking about this one right here. This might act as a little bit of a bounce to the downside for us, but it's a long ways away. It's about 100 pips. I'll be putting an alert on that spot, and we'll see how that works next week, guys, when we come back. So, nothing down here. This is all too choppy. There's no real strong zones coming out of this. There is one here, okay, that maybe you could take a quick look on the smaller time frames. But just to finish off my time, guys, these are way too skinny. There's not enough consolidation here, and the candles are too itty-bitty. Okay, it's all right to be itty-bitty, just not candles on my chart. So anyway, with that, we'll see how this zone up here comes into effect. Perhaps it bounces into the demand zone and gets pushed back up to the top. But as of right now, nothing there for me. I'm going to play around in 15-minute land, guys. Up next is James. So with that, have a wonderful day. Take care. Be safe.
Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, Acap. Acap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with Acap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/Acap. That's a1trading.com/Acap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new Acap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/Acap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/Acap. Now back to the stream.
Hello. Happy Friday, everyone. Hope you're all well. Hope you've all had a great week in the markets. So, a couple of positions open. There's not really any change since yesterday. So I'm currently in euro dollar, which is risk-free. Pound dollar, also risk-free. Russell, which is risk-free. I'm also in the Nikkei long. I'm in a pound Aussie short both of these trades are pretty much still at entry. And I also went long on the Australian dollar yen this morning, which is also hovering around entry. So I quite like the Aussie yen. I think the Australian dollar is still one of the most, if not the most dominant currency, slightly trailed behind the US dollar. I'm not really optimistic about the Bank of Japan hiking rates. And even if they do hike, we spoke about this previously, it's not going to be really any difference. The yen will remain the funding currency. So I'm happy to buy the Aussie yen on dips. It seems like the Bank of not the Bank of Australia, the RBA, so the Reserve Bank of Australia, will continue to hike. So that narrative is still in play. If anything, it's just being bolstered even further by oil prices. So again, wouldn't expect the Australian dollar necessarily to have any significant weakening. We might see some mean reversions in the meantime, some pullbacks. Those markets are quite stretched. But overall, I'm still very bullish on the Australian dollar. Same trade, James, Aussie yen long, fantastic, Aizen. Max, I mean, Australian dollar yen shorts for now. Fair enough. Good luck, Max. I hope it works out for you. Sluggy, hello, good to see you. So the Russell, I'm contemplating adding into the Russell because the risk I took was very small and the position is now risk-free. So the Russell is now getting a bearish reading of -8, which is obviously fantastic. When I initially took the trade, I think it was -6. Maybe it was -5. I'm not 100% sure what it was. So I'm just waiting and watching this H1 timeframe. So I want to see if we can get some sort of bounce off these moving averages just to confirm we've had some consolidation, buyers failed to continue higher, and then we can obviously look for a continuation to the downside. The market still obviously suggests that idea. The EdgeFinder is still supporting that idea as well. So I'm completely fine to stick with it, but it's just a case of trying to find exactly where to scale in and waiting for the opportunity. There's not really much else to discuss, to be honest. It's Friday. I don't really look for new trades or really do anything on Fridays to do with the markets other than just watch my open trades and manage them. Euro dollar, I'm a little bit skeptical on. I think my entry was a little bit too late on this position. So ideally, I would have been in slightly higher. I did miss the initial entry up here, so I did get in quite late. And I think the price action is a little bit uncertain here. So the RSI is just coming out of oversold. We've clearly just had a nice bullish or strong bullish H4 candle. So I'm a little bit cautious. I might get tapped at break even, possibly either later today, maybe Monday. If that does happen, I'll just happily look to re-enter. I still like the idea. I'm just not overly satisfied with my entry at the moment. The reason I'm not willing to also leave risk on the table is because I'm already long on pound dollar as well. So my exposure limits are a little bit stretched right now. So I'm quite long on the Aussie dollar, also long on the US dollar. So I'm just playing it with caution in terms of where I'm actually positioned in individual currencies. So pound dollar is actually my favorite one at the moment. I know earlier in the week I was a little bit skeptical and I actually didn't really like the idea. However, as the EdgeFinder score developed even further negative, we also had GDP come out quite disappointing for the UK today as well. I really like pound dollar. I think that's definitely gone up in my personal scorecard. So other than that, there's not, there's not really much else. Pound Australian went short here. Very basic idea. So obviously we've got the high, we've got the low, draw the fib. A little bit of a rejection here off the 50 moving average and the fib zone, corrected a little bit of this left side as well. Also, this was a break and a retest of this previous level of structure on this H4. So we'll see if this one can continue lower. Again, I like the idea, but the entry might be a little bit too late. So if we look at the daily time frame here, or actually the weekly and the daily, both of these are very stretched. So you can see this weekly time frame, the RSI is extremely oversold. Hold on, I just changed markets there. Let me go back to this one. Yeah, so the RSI on the weekly on pound Aussie is extremely extended. The daily time frame could be looking like we want to have a bit of a mean reversion towards these moving averages. So yeah, a little bit a little bit skeptical in terms of the actual entry timing, but the entry technicals are fine, the fundamentals are fine. But yeah, just keeping a close eye. Thoughts on the Australian dollar CAD? I'm staying away from that market for now. So fundamentally, I'm fairly sure it's quite bullish. Yeah, so it's getting a score of +6. So it's getting a bullish reading on the EdgeFinder. However, I am not very happy about going short on the Canadian dollar. So Iran has said they're going to keep the Strait of Hormuz closed. There's I think it's a 30-day reserve of oil that's been deployed by NATO. I know the US also has a bit of a reserve. However, the Strait of Hormuz being closed is still a massive pressure. We're seeing oil continue or climbing higher. Yeah, continuing to climb higher. Where's oil here? So just with those things in mind, I'm not willing to go short on the Canadian dollar in case we then get some sort of escalation, and then obviously oil prices will continue higher, the Canadian dollar will strengthen. So yeah, I think there's much better opportunities. Fundamentally, or according to fundamental data, Australian dollar CAD, yes, very bullish, but with the geopolitical aspect on top, again, it's just lackluster. There's a better opportunity out there. What's up, James, in GU with you and some viewers. Fantastic. It does seem like a lot of people are in either euro dollar shorts or pound dollar shorts, one of the two. So if you're making money in those markets, well done. It's a pretty smooth ride, actually. I think we can definitely get a really, really nice move lower. So I don't really have a hard target. I mean, you can see how far my take profit is. There is no hard target that I've got here. I think it's really just a case of trailing stops, waiting for these lows to get broken, and seeing if we can correct this left side, or maybe not all of it, but just some of this left side over here. That's all I'm doing. I think if we can get the US dollar to strengthen, whether it be a fundamental shift in the US, whether it be a escalation in the Middle East, whatever it is, I don't really care, to be honest. I think the US dollar can continue to perform very well, especially relative to the sterling. Pound dollar pullback for down. Yeah, if we get a pullback on the pound dollar, I'll happily scale into this position. So for now, what I'd be looking at is something like this. So what we've got is a very clean downtrend. So we've got the high, we've got the low, and obviously this was the initial entry in the fib zone. We've now got a lower high and actually an equal low, but I don't really care about that. I'm not a massive technical trader. But then if we obviously draw the fib from here, this gives us a new value zone. Because my initial position is risk-free, I'd be happy to go short if we can get a reasonable pullback here, stop loss at the previous high, which would be the fib anchor. And yeah, look for something like this. I think that's quite a reasonable idea, but it really depends, obviously, how the market develops. On Fridays, I typically, unless there is something really, really obvious and clear that I need to get into, I'll generally wait for Monday or Tuesday to start placing new trades. What do you think about Bank of Japan intervention? Really not a concern of mine at the moment. Let's see what dollar yen's doing. Yeah, so dollar yen's been creeping higher, really nicely approaching 160. So yeah, I wouldn't be expecting an intervention just yet. I think if dollar yen can continue higher towards 162, 165, then yes, possibly that would be a caution again. But right now, I just don't think that's going to be a huge issue. But, you know, it's one of those things. I could sit here and tell you I don't think it's going to happen. Someone else could sit here and tell you it's imminent. Neither of us really know. You know, it doesn't matter what I say or what I tell you, because they can do it any time with no warning. So take it with a pinch of salt. I had a good long yesterday on Pound New Zealand, hoping for more. Interesting. I've not checked Pound New Zealand. It's just not popped up on my radar recently. Yeah, I suppose if you were long down here, that's a really nice position to have. It looks like technically we could be getting a bit of a trend change here. We are seeing the moving averages start to converge. However, I suppose really this might be a bit of an issue. This sort of, you know, we've had the break retest of this level over here. Maybe that's a bit of a concern, but fundamentally I don't really stand either way. So I've got really no interest, to be quite honest with you. You bearish on the New Zealand dollar? Fair enough. I think that's a valid take. Pound CAD bearish. Yeah, I mean, when it comes to the Canadian dollar, I'm cautious. So as I said earlier, with not wanting to go long on the Aussie dollar or the Aussie dollar against the Canadian dollar, the same thing applies for going short on pound CAD, because we again still have the situation in with Iran. So that's caution for potential Canadian dollar strength and oil bullishness. But if we start seeing de-escalations, we'll see the opposite effect. I don't know what's going to happen. I don't expect it to de-escalate quickly, but it could. You know, Trump has a pattern of doing things over the weekend. I just don't feel comfortable being long or short on the Canadian dollar at the moment. I know that's not super helpful, but that's just my view. So, you know, that's what I'm going to tell you. Remember when I said Citibank did a forecast on GU to 1.24 a few weeks ago? They definitely had insider info. Yeah, I mean, yeah, I'm not sure I'd consider that insider info. The UK's been cracking for a long time. You could say I had insider info. I was calling this idea since November last year. In fact, probably even earlier. Not the exact idea, by the way. I don't want to portray it like that, but I've been calling for sterling shorts since last year. Don't hold trades over the weekend. I also don't agree with that sentiment. I think if you are going to hold trades, you just need to be careful on what exactly it is. And you also need to be prepared for the risk and understand what the cause and effect of that trade is. So, for example, if you are holding the Canadian dollar over the weekend, you need to understand if there is some news that develops, how does that news affect your position? How will you manage that position in relation to that? Euro dollar's head and shoulder pattern. Yeah, I don't trade head and shoulders, but we can have a look, I guess. Are you looking at this as shoulder head and then looking for this next shoulder? Is that your idea? I kind of get it, but I don't know. I don't really care about technical patterns, to be perfectly honest with you. I think it's very much a 50-50 thing. And this is just from my experience. I'm not saying they don't work, but I think there's 100 times you could show me it does work. There's probably 101 times I could show you it doesn't work. I think if you're going to use them in confluence with something else, like whether it be fundamentals or whatever, fine. But just from a head and shoulders or just from a cup and handle or just from whatever it may be, I think it's a little bit hit and miss. So Dorothy's asking for Bitcoin. I don't know. I'm really mixed at the moment on Bitcoin. I think I've said this previously. I'm very, very 50-50. And I know I'm taking that on quite a few things like the Canadian dollar as well. But there's 50% of me that thinks this is a fantastic buying opportunity. I mean, we've come down to this weekly 200 moving average. You know, we've retested this level of structure. We've shown respect here. This is a really strong bullish weekly candle. Technically looks fantastic. But my argument against my own idea there is that these crashes we've had previously have been much more severe than what we've had here. So, you know, if we look at this one, 85% almost. This one was 75%. This one over here, I think was around 50. Yeah, 52, give or take. So if we're looking at the historical crashes in Bitcoin, it makes sense for Bitcoin to want to go towards 20 to 40,000 within that range. That is a large range, obviously, but it could be within that idea. So if you are bullish on Bitcoin, I think possibly buying it here makes sense. But that's obviously if you can budget and afford to possibly start DCAing in if we do start seeing lower prices. I'm by no means a bear on Bitcoin saying it's going to go to zero, but I would be prepared for it to go towards 20, 30, 40. That's just my view. Again, my disclaimer is always that I don't trade Bitcoin. I'm not a crypto guy. So what I understand about it is very, very surface level. And the majority of things I do see and do talk about in Bitcoin is just price action. So again, take it with a grain of salt. How to see institution trade, get bank reports. Or you could just trade ICT. Just look at order blocks and FVGs and liquidity sweeps. You'll see it all there. If the war de-escalate, BTC could do 100. I'm assuming you mean 100K. Yeah, very possible. Very, very possible. Structure and wave says 50K and below. But if that does otherwise, then we will go with the market. Yeah, I suppose. I mean, what else can you do? I'm just DCAing. Missed the bus last time waiting for 12K. Ian, yeah. So when I say I don't trade Bitcoin, I don't actively trade. I do have some on a ledger, and I did buy some yesterday. Actually, not a huge amount. I'm not a big investor in crypto. I'll buy $100, $200 here and there if I've got some spare cash laying around. So I think I put about $200 in Bitcoin yesterday, but again, it's the amount that I don't really care what it does. Do you know what I mean? Whereas with for example, a stocks portfolio is more a case of, oh, the headlines are developing, I might want to sell this stock or buy that stock or whatever it may be, and also diversify it. With my ledger, it's purely Bitcoin, and it's just a case of buy Bitcoin. If I've got some spare cash, I don't really care about it too much. I prefer against determining bullish or bearish based on tops and bottoms. I prefer to be late cycling. That is generally a pretty good rule. I think Nick says it quite well. The buy high, sell low thing is great in theory, but in practice, buying high and selling even higher is actually so much easier. Target on dollar yen, the Aussie dollar yen. There isn't a hard target. It's generally, my trading doesn't involve having a set target, especially with these markets that do trend very heavily, like the Australian dollar yen can do. I mean, look at this. So my idea here really is just to trail stops and just let it go. Very likely, what I'm expecting here is maybe some consolidation. I don't really care what happens short term because it's a positive carry trade. So basically what that means, because of the interest rates, I get paid to hold this as a buyer. So the longer I'm in, really, the better. So ideally, we just see, slow chop to the upside. What I would expect is I would eventually be taken out by a possible intervention because I don't really have any reason to close out of an Aussie yen long position, to be honest, unless fundamentals flip, of course. There's just a link being dropped in the chat for the free momentum model. So that is basically the way I trade, which is obviously following trends using pullbacks and the EdgeFinder. So if you want to know more about the EdgeFinder, which is obviously trade discovery, or you want to learn more about the execution, which is the technicals, you can get that course or the guide completely free. There's no strings attached. So if you'd like that, click the link. And again, it's completely free. Ball out is the one keeping DXY below 100 with his multi-billion-dollar fund. Yeah, I mean, the dollar's been doing very well recently. I mean, for obvious reasons. The VIX seems to be cooling off a little bit. It's still hanging around 25. But yeah, there's nothing overly interesting going on in the markets. I think really the main play is long the Australian dollar, long the US dollar, short risk assets like the Dow, like the Russell, things like that. But yeah, very straightforward at the moment. Jan was gold, Feb was oil. Now March is Dow and GU. Yeah, that's true. Yeah, it's been a month by month theme. I do think calls for DXY bullishness is early. I'll wait for the neckline and the weekly to break. Yeah, I mean, I think the US dollar is about to start a new bullish cycle. So let's have a look at the US dollar. Now, I've been talking about this for a long time. However, I think a lot of people have also been looking at the same thing. Let's go weekly. Yeah, here. So every time we've come down to this level, how many times do you think people have sat there saying, oh, the dollar's finally going to crash to, I don't know, let's say 80, or the dollar's here finally going to crash to 65. Here, the dollar's going to crash to 90. How many, every time? I mean, to get to these bottoms, you need some doomers in the market. Every time we've come back up and had a bullish cycle. I wouldn't write it. I wouldn't, right now, I think with the situation we're in with the US and Iran, even just the core fundamentals for the dollar are quite good. The Fed's on hold. There is really not that much to keep the dollar down at this time. Obviously, that could change tomorrow, could change over the weekend, could change by next week. But right now, I'm quite happy to sit as a dollar bull. With what's going on, it's only moved a measly 1%. It doesn't matter, ball out. The thing is, it really doesn't matter when you're trading, the way that we trade with leverage, CFDs, and percentage per risk, or percentage risk per trade, it doesn't matter if it moves 0.1%, 10%. It depends on obviously what size of the position you placed. I could earn $500 from a 0.1% move, or I could earn $500 from a 10% move. So it doesn't affect me in any way. Dollar remains firm. It does indeed. Again, I can't find any bear case for the dollar right now. So oil doesn't really have much going on. I did attempt a long position in oil earlier today, a very, very small one, just to bounce off this moving average. So I was in, can't remember exactly what it was. It was something like this. So I went long here, very small position. And I was stopped out of that one, but it was fine. I would still look to long oil, probably not right now, not looking to hold anything over the weekend. It was more of a quick scalp, meant to be a day trade idea, didn't work out. But yeah, I think next week, if there's not been any de-escalation talk, I'd be quite happy to be a buyer on a pullback. Looking maybe for a correction back up to, let's say, 116, just to round off the number. I think that's a reasonable idea, especially with the way things are going. It doesn't seem like oil really has any real bear case situation again, unless we start seeing oil channels open up again. We're just 2 weeks into the war. Next 2 weeks is central bank panic phase. Yeah, that's the thing. I mean, with oil up as well, it's that central bank. Not central banks. The global inflation idea as well. So it's like how much can a central bank stay dovish if oil is flying higher and inflation's also rising on the back of that. Okay, so I've got 4 minutes left, and then we have Alan Perez coming to take over the show. There's not really too much. Silver's getting a bearish reading, so let's have a look at what silver is doing. We'll go in this chart. Give me a second. Daily looks bullish. H4 consolidation, not too much going on there. H1 looks quite bearish. However, just with the way the H4 is, this is a mess. There is no way to trade that right now. So I think I'm not going to sell silver, by the way. I'm still very bullish on silver long term. But if we were going to sell silver, what I'd need to see is a break below previous lows here, pull back into this low, forming that break and retest, and a continuation lower. There is potential for silver to continue lower. I mean, I wouldn't surprise me, maybe come retest the lows around 65. Below that, I'd be very, very surprised if we end up below 60 on silver, to be honest with you. I think there's still a massive use case. I think the fundamentals are still bullish. When I say fundamentals, I'm not talking about the EdgeFinder. I mean more of the industrial side of silver. So if we end up coming down to, I don't know, let's say 65, 60, 50, I'll just start buying silver, start accumulating it again. I've got no reason to necessarily start selling it, to be perfectly honest. I think short term, maybe, yeah, some intraday trades, maybe some scalps, maybe a short term swing trade short, fine. But yeah, it's not something I would really want to get seriously bearish on at this time. What else do we have? So there's not too much. So platinum's bearish as well. There's no gold on here just yet. New Zealand US dollar could also be a nice short. The problem is I'm already, as I said earlier, I'm already kind of at my threshold in terms of exposure on the dollar right now. However, they are both risk-free, in fairness, but I would rather scale into those positions rather than looking to get into a new market. But yeah, I think there is potential shorts here. Maybe something along these lines. So I quite like this. Pull back into fib, stop loss at the high, and then again, just sort of a trailing stop, no real target. The reason is because the fundamentals are obviously bearish. I mean, the EdgeFinder showed that. A little bit of a pullback makes sense into this 50 moving average. Let the other moving averages catch up as well. As long as we can see some sort of rejection here, I think this is a completely valid idea. But yeah, that's kind of it. There is really nothing else going on on my side of the markets. Today's close is going to be interesting. Why do you think so, Sluggy? So yeah, pound Aussie still getting a bearish reading. The Euro Australian is getting a bearish reading as well. So let's take a look at that one. Obviously, I'm already in the pound Aussie, so I'm not really looking to add more Australian dollar exposure, but we'll take a little peek and see what's going on. And right here. Yeah, I'm not really a fan of this one, to be honest. I think if I was going to enter this market, I would need to really see a pullback into these previous lows. And again, as I always talk about, this sort of break retest pattern. So far, if it starts coming lower from here, fine. There isn't really anything I can do about that. The daily is also quite stretched. I mean, we've just come out of oversold on this RSI. We're very deviated from our moving averages. The weekly, same thing with pound Aussie, very extended on the RSI as well. So makes me quite cautious. But yeah, we'll see. The fundamentals are bearish. Wouldn't surprise me if it continues lower, but in terms of technicals, I just can't get in. JOLTS in a min, fantastic. I'm sure Alan will go over JOLTS with you. He'll be here in a second. You think dollar bears will have the balls to hold through the weekends? Doubt it. That is a fair point, actually, Arthurman. Yeah, fair point. Anyway, ladies and gentlemen, I'm going to head off. Enjoy your weekends. Have a fantastic rest of your days. Don't go anywhere. You got Alan Perez coming to take over the show. Stay safe and don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Happy Friday. Hope everyone's doing pretty good here today. Okay, we got a lot to talk about here. We did have some inflation numbers from the US. We also had GDP and things out in Canada as well, UK as well. So things are moving. I was very surprised actually this morning when I woke up and I saw the dollar index had already broken out. So it had left the station. That was one thing I was really looking forward to, was playing that dollar bullish breakout level to that upside to this 100.2, 100.5 area, that next level of resistance. So seems like I missed that trade, right? I was really looking forward to it. But now let's go ahead and look at where we can go further if we do get another pop into the dollar index. I think it's possible. So let's see, just looking left here, I would say maybe this level right here would be a good one, 100 point, what is this, 100.2? So 102, 101, 102 would be that next level of resistance for the dollar index. But I'm very curious to see how this actually plays out, just from a technical perspective here. Once we've reached these levels here, this 100 handle, that is usually a level of solid resistance. So you see the dollar reacting to it here slightly. If you go to the 1 hour or the 4 hour time frame, this is the 4 hour here. You can see that that dollar index is starting to fade off a little bit here, but just given the overall macro landscape, fundamentals usually, when they have a lot of momentum, they override the technicals, and that's where you get these like clean moves here, like what you've been seeing on the dollar. So very, very possible what that would look like. I still think this pullback into this level, this 99.500 level would be good, especially after this breakout here. So just drawing it out to make it very, very simple. You had this clean breakout here. So if you somehow get yourself back into here and the fundamentals are still in play, and what that means is continued escalation, oil prices higher, yields higher, then I'll definitely love to go ahead and take a stab for the dollar index long here to the upside. There's a chance, though, that I missed that trade, right? Because there's a lot of momentum behind it. And in that case, what that would look like would be waiting for a break and retest from this level here, this 100.4, 100.2. So breakout, retest, and then trade it back to the upside there. So that's what's on the top of my mind here. As far as my current trade that I'm in, I'm long the Aussie basket as a whole with 3 Aussie trades: Aussie dollar, Aussie CAD, Aussie Swiss. You can see that Aussie US dollar here is in break even right here. You can also see a dollar CAD did go ahead and get into this 50 to 61.8% retracement level, this golden zone, and is now trading higher here. So we'll see how that plays out. You are getting some softer oil prices too, which is helping that pair out. And then you have Aussie Swiss here at the 38.2% retracement level and then trading it higher. I like the Aussie dollar story. I really, really do. If I verify here the top setups page, let me see, because I haven't really checked it here this morning. Let's see. I did see. Okay. So the Aussie basket as a whole still getting a very bullish rating. So I'd love to see that. But I did mention to you guys, like I am looking to go ahead and close out the trade, and then reopen it on Monday, because there is the risk of a gap up, gap down. Basically, like if there's a de-escalation or re-escalation. So that's something that I'm mindful of. What I'll be doing, though, to kind of handle that is just look at financial juice, right? If there's any headlines or anything promising that comes to mind when it comes to like de-escalation or anything like that, then that would give me the confidence to go ahead and just hold the trade overnight. You are getting a very strong bullish score, though, so that kind of like makes me very confident in the trade. Nonetheless, like I do want the trade to breathe and stuff like that. So maybe with like most of the pairs here up on the day, or not up on the day, but up from my entry price, like you can see, to Sluggy's point there, Aussie CAD, I like the relative performance in that. It really held its weight here, getting into that golden zone and now trading up higher there. So yeah, Aussie CAD, just solid potential there. So that's kind of what I'm looking at here. You did mention, Sluggy, about the weekly candle formation, so look at that. It's still very good, right? So that gives me a little bit of confidence there to go ahead and see what happens. Again, I'll be looking at financial juice for any promising headlines and stuff like that. I did see when it comes to something that's good for oil prices lower, or not oil price lower, but like de-escalationary, if that's even a word. We also had JOLTS drop openings to come in lower than expected. But I did see, I think it was France and India that are looking to have talks. There it is. France and Italy opened talks with Iran in hopes of securing a safe Hormuz passage there. So that brought the dollar index lower, that brought the S&P higher, and that brought oil lower. Now, obviously, France and Italy, right? It's not the U.S. talking, right? If the U.S. were to have said something like that, then that would definitely push oil prices lower and equities higher there. But I think it's a step, right? But of course, right, these are just headlines. You have to really basically, what I'm looking for guidance when I'm trading this stuff is the price action first and then the headline second. So oil down today is a positive. You do have the 2-year yield down almost 1% here today. It was up yesterday about 3.5%, I believe. 3.55% US 2-year yield there. So it did get a good solid pop. Now you're above that 200-day moving average. So as long as yields are elevated, that means markets are pricing in that prospect of a higher rate regime, right? Higher inflation prospects throughout the globe. So that's something that I'm looking out for. Let's look at the VIX here is at 25. So you get, this big pop in the VIX, fade, pop, and then fade again. So we're pretty much at the levels where we were before the conflict actually started. That was right around over here. So we are in that territory there. You are seeing equities here trade higher as well, which I like to see. However, this would have been the follow-through move right here, right? I remember here, VIX was popping. You get into this level of what I think is like support or demand, whatever you want to call it. This 200-day moving average as well. Put to call ratio was high. So this would have been the spot where you would have got a V-shaped reversal. Now we are trading back into this 200-day moving average. So if you start to see stocks just grinding lower, then you do have a risk of stuff really looking to roll over. US 30, Dow Jones, whatever. Good job, guys. For those that are in the trade short here, fantastic. Really, really appreciate it. Or not appreciate it, but like very, very awesome to see that. I did see here Nick kind of rubbing it in here on me today. Correct all the dollar bulls out there. I was a dollar bull, but I did kind of flip a little bit. So Aussie dollar is a little bit bleeding there, but I think we still have a chance, guys. So we'll see. But I have been loving the Aussie dollar relative strength. So despite all of this, the Aussie basket has been holding up its weight, especially being a risk currency. So I love to see that. Let's look at other things. Gold here, interesting chart as well. Same thing, holding its weight, right? Marco mentioned this earlier, but trading like a risk asset. And I completely agree with him. It kind of resembles the price of the Aussie dollar. You have this flare up here, a little push up, and now you're kind of just stalling out here. This seems to be obviously a good level of support, this 5100 handle. Let me see if the top setups has changed anything in respect to gold. Let's see, gold. Wow, look at that. Gold's getting a bearish reading. So not good at all, I would say. But this is a solid level of support. If you had like a higher reading, like a bullish reading on gold, this would have been a really, really good buy opportunity. You have a level of support with good fundamentals behind it. But as of now, it is just not the case, right? You have good fundamentals, but you don't have the fundamental backdrop behind it. So I know there's lots of gold traders out there, people that love gold, that really want to trade gold. But I would say don't force it. The best trades come from strong fundamentals and strong technicals, strong sentiment, and gold does not have all of those three, right? There's other trades out there. You have the dollar, right? For example, really, really good trade. You have the equity index play as well, right? Rate sensitive. If you get that higher for longer narrative, that's definitely going to hurt that. You have things like the euro, the pound dollar, which are getting weak, right? The UK had just been getting L after L after L. They have, stagnation risk. Stagnation risk in the UK. Lots of things going on over there, right? So not the best story. So there's definitely better trades out there for sure that you can be taking. Not ES November low. ES is holding up better, right? Rather than the Dow. You are getting a rotation trade out there. So ES is holding up pretty well, I would say. This level of support so far has been holding up nicely. The 6,600 level. In the past, it held those two times right there. So right here on October 2025 and November 20th. So we'll see what happens. But if you start to really start hanging out here for a long time, and then just the risk of it rolling over becomes higher, then you do have some real risk. I think what would cause that would be obviously oil prices elevated for an extended period of time. So I say anything above, we'll say like 80 or 76, 79, 80 in that area. If you get it higher for longer, that's definitely a huge risk for this market to start rolling over. And I think, in my personal opinion, you're probably looking at price action, this is only 12%. I know 12% doesn't, look scary, but 12% I still think is a very healthy pullback, right? If you're like getting the stock index at a 12% discount, I think that is really good from a technical level. That will be looking pretty nice. So, but we'll see what plays out. I'm getting ahead of myself here. What I would say though, in this environment to kind of help yourself out, navigate the stuff. Again, like I'm looking at this over the weekend, everything. Like if something happens over the weekend worth mentioning, I will definitely let you know before the market opens on Sunday. And so with that, I would say, go ahead and join the Telegram channel. It is completely free to do so. There's bonus content. There's discount codes to prop firms if that's your thing. You have daily quizzes. You have daily chart markups. Completely free value. I would definitely go ahead and recommend that you join that, especially if you want to stay up to date over the weekend. So we won't have the live streams over the weekend. So if you want real time, market coverage, go ahead and join that Telegram channel. We'll drop the link here in the description. I promise it'll be worth it. And also, too, if you can, get yourself a copy of the EdgeFinder. That way you can nitpick the trades that are high probability, right? So, for example, gold looks good from a technical perspective, but the fundamentals are just not there. So definitely avoid it, right? Most people that are not aware aware of the macro and all that good stuff, they will blindly take this trade and they'd be getting chopped into pieces and probably break even or at a loss, right? And this thing starts to roll over, especially getting that 5 bearish reading, you could avoid that loss entirely by just, having an understanding of the macro fundamentals and using that to your advantage. So definitely recommend you getting a copy of the EdgeFinder and at least join the Telegram channel. I promise you will not regret it. Let's see. Sluggy said Dow is like a slow grandpa. Yeah, it's just been kind of just chugging lower here. Very slow, very soft bleed there, which is good, right? Which is very, very good. Usually when you're like when the equity indexes are trading to the downside, you get this very sharp fall and then a grind higher and then fall. So to see this kind of just like cruising down lower, that's good to see. You are at that 200-day moving average, which I think could be a level of support if you start to see the right things, if you start to see yields down and oil down. But for now, like it just seems like the path of least resistance is probably to this 45,000 handle here. So we'll see. Does the Telegram have the same info as the free Discord? I think so. The only thing that you will get from the top of my head, Lex, the Telegram channel does have bonus clips and content. So Nick would post occasionally like the videos that you see here going over certain things. I don't think that's on the Discord there, so definitely worth checking out. What the Telegram definitely has that the Discord does not have is the polls. So every single day I post polls. Like, yesterday was, what does liquidity risk mean? Sometimes I make them hard, sometimes I make them easy. I try to also keep them surrounding like the current environment to make them make sense, and just so you're kind of like sharpening your tools, with relevant information. So what was it, a day before yesterday? What does risk premium mean, right? That's something you should know in this environment when it comes to oil and all that stuff. When there's supply disruption stuff, risk premium is added to price. So yeah, I like the quiz thing. This is something I just came up with one day, and it seems to be getting a lot of great traction. People answer all the time, so it comes out at the market close. So it's called the closing bell question of the day. So yeah, something you should join, Lex, if you haven't already. Of course. Ball out said the trading Nasdaq sucks. Yeah, I would imagine. I mean, like, this is not awesome price action. Like, this is just back and forth. Hey, Marco,
Hello,
how are you today?
I'm doing pretty well. How are you?
I'm doing good too.
Awesome.
Aussie dollar's beating a little bit, but the other ones are
Yeah.
holding up nicely, so I'm okay.
Planning to exit at the end of the day?
As of now, yeah. Unless you see something that I like, which is probably highly unlikely.
Yep.
Then yeah. But we are seeing a little bit of I wouldn't say a risk appetite, like a huge risk appetite, but you are seeing equity screen, VIX lower. The short end of the curve here is lower, down 1% for the US 2-year yield. And you are seeing oil down on the day, but down on the day when you're looking at this price action, it's still elevated. So something to be mindful of. But yeah, I'm waiting for something to come out, and if not, I will just close out the trade. I will say though, I woke up this morning to a surprise that the dollar index broke out of the level and already tagged that next level of resistance, that 100 handle. So I missed that trade. Originally, I was going to wait for the breakout retest and trade it to that next level and then take profits there, because usually this level here has been a strong level of resistance. This 100.2, 100 level right here has held up pretty nicely in the past. So to me, I think that's kind of like a stop sign right there. But of course, like in an environment like this, the fundamentals can definitely outweigh those technicals, and this thing can just trade higher.
Yeah, I'm also looking, since you're showing the DXY, also before I put up my charts, let me just put in the form giveaway. So in the comment section, I will put the link to this form, and then fill it out. You will get entered into a DNA funded giveaway. So during my segment, we will announce the winner. Yeah, that's about it. So what I wanted to say is on USD JPY, we have kind of touched the level. We didn't hit 160, but we are super close. So we are definitely approaching it. We will probably hit it next week. So I have been looking on Financial Juice. I don't really see anything from the BOJ. Let me try to put it one more time. So yeah, I don't really see anything from the BOJ regarding a possible intervention. But the general game plan is, if we go to 160 and if we get a post in Financial Juice saying from the BOJ saying we don't like the current strength of the dollar, the yen is too weak, I'm definitely gonna set basically a sell position. But what do you think about it? What do you think about sort of just blindly selling at 160, even if there is no news from the BOJ?
If there's no news at all, no chit chatter, I would probably hesitate from that.
Yeah,
I would like to see them acknowledging it, and I've seen that in the past during this thing has been going on. Like you've seen Ueda has been saying stuff, but this was like a week ago. But I would like to see another flare up of that, more chit chatter around it. And again, just like a speedy depreciation. Like if you were to get a gap higher, that would be ideal. Like over the weekend, if you would a gap higher into like 160, 164, something like that, that would be really, really nice to see. At that point, I would probably, step into that train, but blindly like that, I wouldn't.
Yeah. I mean, it's super close to the critical level. It's just that I was thinking maybe this time is different because we have the war going on in US and Iran. But doing the research, there has been instances in the past when both the S&P and the BOJ actually intervened because there was a crisis. So because the dollar exploded in value, or because the yen exploded in value, or because the Swiss franc exploded in value as a safe haven, they did an intervention. So they may even be more inclined to do something because of this conflict. So that's something that we're gonna have to wait and see. As far as the Aussie goes, so we pretty much covered that idea. Do you have something that you have developed sort of in this week that you have started to look at this week? Maybe a different currency pair?
Different currency pair. I definitely, and I missed this definitely over the night, was dollar index, this breakout here to the upside. I wanted to play that via the euro.
Okay.
But like I woke up and I was like, man, this thing already hit that. So not really looking at anything new. It's basically, the game plan moving forward until something new happens is a risk on trade or risk off trade. If it's a risk on trade, then I'm definitely, or if I'm looking to fade the dollar or anything like that, it would be via the Aussie basket. And if I'm looking to go ahead and play that dollar safe haven, then it'll be with the euro. Those are basically my only two options at the moment. Just because that's kind of like the landscape we're operating under. If it was like a different story, like let's say we didn't have the war and stuff like that, then I would definitely be looking at other baskets like dollar CAD or pound dollar short, something like that.
Yeah.
But just for now, I think the best play, like what's most in play, is dollar safe haven status or risk on trading. So that's kind of just the two that I have. Do you have? Are you like looking to broaden your horizon and look to pick up other things, or because you're pretty active too in the foreign indexes too, like the Nikkei and stuff, right?
To be honest, I wouldn't touch foreign equities at the moment, especially the DAX, which is getting crushed, and is probably gonna continue to get crushed once the inflation spike comes in. I know the traders are starting to bet on possible hikes from the ECB, which is not going to happen as far as I see from most of the experts. They're saying it's just not going to happen. But Nikkei, I still love the buy Japan narrative if the war ends. So once the war ends, I think we're going to get a pretty big reaction, possibly a quick one to the initial level. And I definitely want to participate. But if it's still unclear as it is at the moment, there's not much for me to do. I think the current environment is pretty split. So the 4 traders or 5 traders that I look at the most is Nick, Brent Donnelly, Andrew Campbell, and Vuk Vukovic. 2 of those guys are positioned for the extension of the conflict. That would be Nick and Andrew Campbell. 2 of them are positioned for a resolution, which would be Brent Donnelly and Vuk Vukovic. So the experts that I'm watching and following basically are split. And usually the best trades come when all 3 or 4 of them are in line with each other, if that makes sense. All of them are calling for the markets to do the same thing. So my edge, as far as my research goes, is pretty much 50-50 at the moment. We can get an escalation, we can get a de-escalation. No one knows.
What does the de-escalation position look like? I'm sure it's kind of built of different trades and stuff like that. But like, is there a theme that's kind of aligned with Brent and the other gentleman? What does that look like?
So Brent is buying or has bought the Aussie dollar. I think he went more neutral recently, but he definitely was in the Aussie dollar. So that was his risk on position, and Vukovic was calling for buying dips on the S&P. So essentially, I think he probably bought this dip right here. He was heavily referring to the stock market, so I'm assuming that he bought the S&P, which is of course again a risk on play. And if the war actually ends, yes, this thing is gonna go higher. On the other hand, you have Nick, who sold the Dow. I think that's the current trade he has. So he sold the Dow, which is doing pretty well, and he sold GBP/USD, which is also a risk-off play because the dollar is a safe haven. As the conflict drags on, dollar goes up, GU goes down. And the Andrew Campbell guy, he bought gold. He's in gold, and he is in something else. He's doing something with bonds, counting on a risk-off play with bonds. I'm not exactly sure, but that's what is giving me a bit of a conundrum. Like, two of them are for a de-escalation, two of them are for an escalation. There's, looking at all of the analysts that I follow, there's not a clear edge, and pretty much it's tough to even know what is going to happen. So for me as a trader, I'm trying to stay as flat as possible, wait for the next catalyst. So wait for the next news basically post, the next catalyst that is probably going to stir up the markets out of this more flat and range bound period that we have in the last few days.
Yeah, and Marco, that takes a lot of discipline to understand that and stay flat, especially when you have things moving the way they are right now. Like, I feel like old me would definitely be chasing stuff right now and just taking loss after loss after loss. Because when you first get started, like, that's what you want, right? And then you see the volatility, and you see maybe you see signals or something like for example, Nick just killing it, right? Or things like that. And you see like continuously wins, and you're like, man, what am I doing? But that is like, if you are not in a trade, like for example, I'm already in the Aussie basket. It was working out pretty well. 2 out of 3 are working out well. The only one that's down is Aussie dollar, which is break even. Other than that, I'm flat. Like, I want to be dollar long. I can't chase it. Like, I want to be short euro dollar. I can't chase that. I want to sell dollar yen, but it's not the right time. There's a lot of things that look good, right, on paper, but you have to have that discipline to go ahead and just stay back and stay put. And then what it does is it allows you to, like you, Marco, you're analyzing both sides of the coin. You know what I mean? So when you start to see a narrative kind of shift more in favor of one or the other, that's when you can have, like, all the patience behind you, everything ready. You're pretty much cash ready to go ahead and participate. I love that. And I'm kind of in that same position too, where you're getting conflicting stories. You're seeing France and Italy talk about moving through the strait. And if they do successfully do that, then who knows what other countries are going to start following suit with that as well, and kind of bypassing that. That's good. But then you also have, just the continuous strikes and this and that, whatever. So it's definitely a back and forth.
Absolutely. And what was interesting, the 4 guys that I mentioned a couple of minutes ago, before the conflict happened, 3 of them were calling for a possible escalation, and 3 of them were positioned for a possible risk-off scenario. So Nick was long oil, Brent was, I think, looking at the Aussie dollar as well, and Andrew Campbell had some gold. But didn't turn out so well for him, but he was expecting an escalation. So it's pretty good to follow different people with different opinions, because when all of the opinions align, you get a pretty good edge if you just follow what most of them are doing. So they sort of flip from most of them calling for an escalation to now they're not sure, 50-50. So yeah, we just need another catalyst. What I do like, though, I do still like gold. So if I bring it up here, it is still flat, pretty much not doing anything, but I think it should go up overall in both scenarios. So if we get an escalation, yes, we sold off initially as the market struggled to sell everything and just go into the US dollar, but long-term conflict should make people rush into safe haven assets, and gold is still a safe haven asset. So the long-term effect should be bullish. And if we get a de-escalation, I still think there's quite a lot of uncertainty in the world, and possibly those rate cuts will actually come from the Fed if we get a de-escalation, because inflation will just have a one-time bump, and then we're back to possibly initial levels. So we can cut, or the Fed can cut, which is of course bullish for the price of gold. So that's my thinking. And I'm just waiting for the reading on the EdgeFinder. Whoop, I didn't open the EdgeFinder. Let me just do that.
Yeah, one thing I think the perfect scenario with gold, because there's definitely that possibility, right, that this is just another prolonged war, which is something you've spoken about too. And that's possible as long as you still see oil flowing and it's not causing that big disruption, right? Like you've had Russia, Ukraine going on now for a while. And you just kind of, you get past it and you start trading on the new theme, whatever that may be, right? We'll know in a couple weeks. So if you were to get somehow like that France, Italy get passing through the strait and you get other ones going as well, then that kind of just turns off that oil supply risk, right? And then that's the environment where gold thrives, because at that point yields will be going lower. That's gold's kryptonite there. And then you get that natural safe haven bid again going into gold. So that's kind of what that perfect scenario would look like, in my opinion. And maybe we get something like that. I'm seeing parallels to that one trade that I did dollar yen when this whole tariff thing happened, whenever we had that interview a while back. When I bought dollar yen at 140, when you started seeing India coming to talk about trade deals, you had a speculation of like people come to the table, and India was the first one that actually like went down, talked, and then there was actually something that came out of it. And from there, that was literally the low in dollar yen.
And the UK made a deal as well, right?
Yeah, right. Soon after that, right? What was that? Was it 140 or 150?
That was a good bet.
That was a good bet. So I'm tripping. 140. That was not the case. Was it 140? No, this is a 4-hour time frame. Yeah, it was 140. I remember. Somewhere around here, right? And then that happened. And so if you start to see that happening again, but instead with countries coming to talk with Iran to get an agreement to allow ships going through, then that can definitely be the trade. The risk is you're early to it, and then it just keeps going risk off. But yeah, those like risk reward trades that are the most heavy are those when you're a little bit early and you can stomach a little bit of drawdown. But I would say too, like the safest bet in this case would be wait for a V-shaped recovery somehow. So
yeah, that's why I love USD JPY and the Aussie Swiss, because you're playing both strong currencies. I mean, not strong currencies, you're betting intervention levels, but you're also positioned for a possible end of the conflict. So like the only, if we can just bring up my chart here, the only way that you lose money on the positions, let's take USD yen, for example. Let's say you sell at 160 and you stop loss at above the 163 level. The only way that you lose is an escalation plus no intervention. And I would say that's pretty unlikely to happen. Same thing if I open up the Aussie Swiss. The Aussie is already doing pretty well in this environment, already holding up super strong relative to other risk on assets, such as the stock market, for example. And like you have the SMB news that they're most likely gonna sell a bunch of Swiss franc to basically take care of their exports. So those scenarios, it's not like you can't lose money, but buying Aussie Swiss, selling USD JPY are super high probability plays, in my opinion, especially if we get some talk from the BOJ about a possible intervention. And personally, if I had to make a sort of a decision, I think this conflict will get resolved in the upcoming few weeks. I don't think it's going to drag on. If I cut all of the crap, I think it's going to get resolved in the upcoming few weeks.
I'm on the same camp with you as well. I think time horizon a month out is a stretch a little bit. I think you will get some kind of a resolution, just because nowadays, like the way markets are, like they just trade so fast, the themes come and go so quick. Yeah, one thing it's like the tariffs are fresh, and then next thing you know, you have the Supreme Court thing. Markets are trading on Supreme Court, and then your markets are trading on a new Fed chair. Then now markets are trading on this, and this. Like things happen
Yeah.
so fast. So I definitely agree with you on that front.
Yeah, what is AI? Like no one is talking about artificial
Yeah, the AI
intelligence
trade,
anymore.
right? The whole AI disruption,
Yeah.
the pain trade, the rotation, whatever. Yeah, it's in the past, but again, those things are still happening. So, but
Yeah.
just markets are not trading on that.
Yeah, like the markets have evolved so that the narratives last for a few weeks, maybe like few weeks tops. Ukraine war, markets forgot about it. Tariffs, like it was a one-time spike in inflation. That's it. Now this conflict is probably gonna get it's probably gonna be behind us in a month or 2 months. If the oil prices remain super high, but I think they're gonna find a way to sort of increase the supply. Maybe they can do it through land. Maybe they can do it through I don't know, UAE or Saudi Arabia, where they can use trucks to bring it to a different point where the tankers can pick it up. I mean, we're pretty there's some pretty smart people working on that case. So I think it's gonna get resolved.
I saw some images of some renderings of the potential, just standard put 2 barrels on the back of a camel and just have them go for it. I don't know if you saw that one. So maybe humans are very creative. So I have faith in humans. So
yeah, I saw renderings of a tanker with helium balloons attached to it. So essentially, they fly it out of the strait and then.
Fantastic. Well, Marco, I leave you to your portion of the segment, man. Happy Friday. I hope you have a good weekend. Stick around because you have the giveaway here for the DNA Funded Challenge. And we'll talk again next week, and we'll see what happens.
Absolutely. Have a great weekend as well. And I'm looking forward to Monday because I think we're going to have another joint segment.
Of course. All right. Someone said you can carry a drum, and someone said new canal to open soon. We'll see, man. We'll see. But all right, man. Take it easy.
See you. Goodbye. I'm going to post the link to the form one more time. So if you want to participate in the DNA funded giveaway, go to the comment section and you will find the form. Okay, fill out the form and your name will get entered into a wheel of names, and then I will pick a winner. If you want to get funded, but you didn't yet win the giveaway, or you won't win this giveaway, definitely do check out DNA Funded. So, for example, this is my personal 25K two-phase account. This is the phase 2. Current equity is 24,990, so right around break even. I did have 2 losses. That's why the sort of that's why the balance is minus 2%. But actually, let me just take a look. Okay, yeah. So equity is around break even, but the balance is with 2 losses. Am I getting confused here? No, it's fine. It's fine. Free trades open, sell on silver, sell on GBP, JPY, buy on the SPX. This challenge is purely traded by ChatGPT, mind you, which is a challenge that I'm doing for my YouTube channel. It's been going pretty well so far. I can show you. So past phase 1 of 50K, past phase 2 of 50K, blew the funded stage with no payout. It is what it is. Then past the phase 1 of the 25K, and now I'm in the phase 2. Point is, if you want to get funded, you can use the code A1Live to get 25% off any DNA fund challenge. So A1Live, 25% off. Check it out. I'm thinking of closing this position. I'll most likely do it at the end of the day because it doesn't make a lot of sense to go into the weekend with an open position like this. That is break even. It's not running in profit. Yeah, sure, if it was here, if the price was heavily in profit, then I would think about it. But as we are standing now, I'm not so confident. I'll probably keep the Euro Swiss position because it's pretty small risk and I don't mind holding this one. I've started to have even more conviction in this position rather than the Aussie dollar. But of course, all of the updates will go in the A1 trading Discord. Gold, I want to buy but I won't do it today because the EdgeFinder is getting a neutral reading, even a negative one with a -4, and it's Friday. Doesn't make a lot of sense to take new positions on a Friday. I have USD JPY betting on a possible intervention. If we hit 160 plus financial juice starts to get flooded with possible intervention talk from the Bank of Japan, then it's game on for me to sell USD JPY. I think this is a pretty good position, pretty high conviction. What I do like as well is I like the Aussie Swiss. Aussie Swiss holding up so well. Looks really good. If we pull back to the 20 MA, I'll be pretty happy to pick up some Aussie Swiss. Just this really nice uptrend. The first major resistance level is at 0.575. Yeah, I love this. Actually, let me put it on my watch list. So Aussie Swiss, let's put it on the watch list. Yeah, I do like it a lot. Time for the giveaway. So let me grab all of the names. Today is the 13th of March. March 13. Okay, we have quite a lot of entries today. Yeah, we do. Awesome. Great to see that. Okay, let's copy all of the names. Wheel. Spin. So let's see. Eric, yeah. Ericy, congrats on winning a 5K one-phase DNA fund account. I will send you the code for the free challenge after my segment ends. So you can expect an email from me. And just to remind you, if you want to get funded, you can get 25% off with the code A1Live. Okay, so A1Live, 25% off on DNA funded. Marco, last time 159.5 was your USD JPY sell idea. I'd say not too bad hedge as of today for USD fade. Yeah, last time we talked about a possible intervention, there was some chatter on financial juice. So you had some BOJ chatter about a possible intervention. Right now, you're not yet getting it. Okay, it's not yet printing. So last time was a bit different. That was around January 2026. But if we go up a bit more, hit the 160, I think 160 is a nice round number when the BOJ will get activated. Then they can start to post some announcements, possible intervention, blah, blah, blah. So that's the game plan for now. I'm not just going to blindly sell. I don't think just blindly selling at 160 or even at this level is the smart thing to do. Yes, if you get a conflict resolution, the dollar should sell off a bit. That is true. If we jump on the DXY, this was sort of the start. I mean, we can go back to the initial levels. It could definitely happen. So we're gonna have to see. We're gonna have to see what happens. That's my game plan on USD JPY. Maybe gold could roll over past 5K. That's about it. Indices are slow. Not interested in oil movement. Looking at oil, yeah, I'm not interested to play oil either. I think the main edge was buying oil during this time, during the escalation. Right now, personally, I don't see a massive edge in doing anything or in buying or selling because it's super unclear. Will we get a de-escalation or an escalation? Or will we just stay in this pat position for weeks or months? So it's still super unclear. Again, most of the analysts, traders, investors that I'm watching, following, they're uncertain as well. So when you're uncertain, best to first go in with low risk. If you want to take something, better have low risk on the idea. Second thing, maybe just staying out and not taking anything is the smart way to go. Okay. One thing that is moving a little bit is Bitcoin, if I got that right. Yeah, Bitcoin actually moving quite nicely. So this is relative strength. This is a really bullish sign from Bitcoin. when the conflict started around the 2nd of March, Bitcoin went higher, and now it's going higher again. Yes, I know it's still in the range. That is true. But if we can break out of the range, then we could see some pretty nice moves happen on Bitcoin. If that happens, if we get the relative strength, especially since everything else is selling, like look at my screen, most of the stuff is red. So most of the stuff is red, especially around this week indices. For example, yes, today it's kind of break even, maybe a bit green, but for the most part of the week, it was red. But Bitcoin has been going higher. So Bitcoin has the relative strength. Pretty good to see this. Let me just see micro strategy. MSTR. Just do MSTR on the NAS. Okay, MicroStrategy not doing anything, but pretty much as is Bitcoin, staying in a range. So let's put an alert. Let's put an alert on Bitcoin. If it can actually start pumping higher, what does the EdgeFinder say? Bitcoin, neutral reading at the moment, but a positive score, +3. If we go to 5, it's going to be bullish. Yeah. If you get a breakout out of the range, and if you get a bullish score on the EdgeFinder, and you're getting relative strength while everything else is selling off, that's awesome. That's really, really good. So that's about it from me. My segment is done. I'm going to remind you, if you want to get all of my trades, all of my positions, all of my analysis, definitely check out the A1 Trading Discord. Link is in the description. And you can use the code Marco to get 25% off. So I've had some pretty nice positions on the Nikkei, for example. It was a nice plus 2.6%. So if you want to check out all of that, definitely give it a look. I'll be streaming every day next week, so you can catch me every day. I'll also be doing a DNA challenge giveaway, one giveaway per stream. So if you want to participate, join my segments. And that's about it. Have a great weekend. Stay safe. Hopefully Iran won't start sending drones to Europe and the US and the rest of the world. But yeah, stay safe. Good luck in the markets, and I will see you on Monday. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.